Whether you're a couple of steps ahead or not, I think is irrelevant. It is a movement that will transform countries over the next decades.
On the next Managing Asia, the people behind Ayala, steering the EV revolution in the Philippines.
When we do something, we want it to scale. So our vision for EVs is it becomes a real component of the Philippine transport sector.
Catch more of my exclusive look inside Ayala Corporation only on Managing Asia.
Have you ever wondered if you're being watched?
Nothing looks out of place.
It's a feeling that's creeping in for more travelers as stories of hidden cameras in hotel rooms, house rentals, cruise ships, even airplane bathrooms continue to make headlines. Spy cams were once the stuff of international espionage. Now, anyone can buy these items, either in stores or online.
But how hard is it to find these cameras? And do devices designed to locate hidden cameras really work? We're going to find out.
We asked a Singapore tech company, OMG Solutions, to hide cameras in 3 rooms in this house. Then we sent in my colleague Victor to see how many he could find.
Well, this looks like any other room.
Here's what we uncovered.
Every new vehicle we put out, we're improving fuel economy and emissions.
We need a balanced and a fair energy transition for everyone.
The total value chain of battery will be very important.
Improve our operational efficiencies and reduce the consumption of natural resources.
Environmental sustainability is a must, and energy security is another pillar.
Renewable energy is cheaper than electricity made from fossil energy in 90% of the world already today.
Fostering sustainability on CNBC.
My parents were Holocaust survivors. They taught me that nothing is impossible. When we set a goal for ourselves to bring a vaccine to the world against COVID, we knew that failure is not an option. Ambition is an integral part of every big success. If we are working for the bottom line, we will never achieve it. What you need to do is to work for the purpose of your company. In Pfizer, I think we have learned when you give to people ambitious goals, you will be surprised how much they can deliver.
Good morning, everybody. Markets kick off on the heels of a losing week on Wall Street with the Fed squarely in focus. No change expected during Wednesday's meeting, but investors will watch the dot plot to see if it scales back its projections for 3 rate cuts this year. Bank of Japan kicks off a pivotal policy meeting today as well. Markets are watching for a major policy shift after Japan's biggest companies agreed to the largest pay hikes in more than 30 years. And Vladimir Putin is on track to keep his position as president of Russia for another 6 years. Early results show he's set for a landslide victory in an election that took place amid its war with Ukraine and continued crackdown on dissent.
All right, let's get right to markets and show you how we're shaping up so far out in this part of the world. New Zealand has been up and running for about an hour. It's looking soft, down 0.6%. Their dollar, the Kiwi, 60.86. Sydney next online in less than 60 minutes. You've got futures there handicapping what looks to be a down start as well. Australian dollar at 65.61. Tokyo is online in less than 2 hours. CME futures, Nikkei futures are calling for a calling for an upstart. Positive one. We'll see. Dollar yen at 149.07 right now. And, of course, as we headline, the Bank of Japan's two-day policy meeting kicks off later this morning. The BOJ is said to be close to moving away from its decade-long ultra-easy monetary policy, possibly as early as tomorrow, which is when the two-day MPC Monetary Policy Committee wraps up. And this is after Japan's union group, or largest confederation of trade unions, Rengo, said the country's biggest companies have agreed to raise wages by almost 5.3% this year, which would be the biggest pay hike in 33 years and higher than forecast. BOJ officials have long said the timing of a shift away from negative rates would depend on the outcome of this year's annual wage talks known as Shunto, or the spring wage negotiations. Reports say the BOJ could also ditch its bond yield control and discontinue purchases of risky assets, including exchange-traded bonds. Sri?
Martin, in the meantime, US equity futures have joined us and are looking like this. Not particularly convincing at this point in time, especially given the event risk over the course of this week, and that is the FOMC and a plethora of central bank meetings globally. This comes after the major averages fell on Friday, with the S&P logging its second straight weekly loss. Inflation concerns persist. As the Fed's policy meeting kicks off on Tuesday, stateside, Fed is expected to keep rates unchanged, but investors will pay attention to an update on the Fed's dot plot or the forward projections of individual committee members. Remember that back in December, policymakers had penciled in at least 3/4 percentage point rate cuts for the year, Martin.
All right, let's get a steer and bring in Deborah Cunningham, CIO, Chief Investment Officer, Global Money Markets, and also Executive Vice President at Federated Investors. She joins us now live out of Pittsburgh. Debbie, good to see you and appreciate your time, and thanks for staying up to do this with us. I know it's getting a little late your side. Let's talk about the Fed first. No move expected, but I'm wondering, right, Sri was mentioning the dot plots, which would be forward guidance. Do you think they're actually going to end up stressing data and data dependency even more than that?
I certainly do think that's the case. And first of all, let me say thank you for inviting me on, Martin and Sri. I've always appreciative of getting to join you at the beginning of your week. We expect at this point and are much more in line with the market that the Fed will continue to expect and give guidance to the market of 3 to 4 rate cuts in 2024. At one, and that's pretty much in line with where they have been now, really for the past 6 to 9 months. The market got way ahead of itself, however, back at the end of last year, at which point they started to price in at one point that we were as high as 6.97 rate cuts in 2024. And that just seems very remote at this point and produced a yield curve that was very, very unattractive at that point. Now, given where we are from a standpoint of continued data and dependency with regard to information as it comes out on a monthly basis, and after the last Fed meeting, the January Fed meeting, continued announcements of needing to get confidence that the economy was on a proper track from a growth trajectory standpoint, but more importantly, on a proper path for continuing to see inflation decline. And quite frankly, I think that the talks about pockets of sticky inflation that keep those numbers higher than where the Fed gets comfortable, continues to push this first rate cut into the second half of 2024.
2H for a start, understood. So in other words, Chair Powell is likely to talk and also try and come across as more positive with regards to continued disinflation, but he's also going to stress the but, and that is, but it depends on the data going forward, yes?
Yes, absolutely. I mean, he stressed that they were not yet confident with the information that they had received, especially with regard to inflation. He mentioned wage inflation, which has been a very sticky issue. And, when you look at some of the labor contracts that have been settled in 2024, it seems to me like those sticky issues are getting stickier. You've also got rents, healthcare. One of the big things that's helped bring inflationary numbers down in 2023 faster than maybe what the Fed was originally anticipating was the cost of energy and the expectation that that may not be, sort of an offset in 2024 the way it was in 2023, I think also brings inflation into question and certainly needs, at least from a Fed standpoint, additional confidence that the trajectory will continue to be downward.
Deborah, how then do we position in this market? Because soft landing, mild or even no recession has become very, very consensus now. Is that in and of itself going to be a problem for these markets? And how then should we position?
I don't think it's much of a problem at this point. The market was overextended in, like I said, at the end of the fourth quarter of 2023, but that seems to have corrected itself to some degree. And quite frankly, it's our opinion at this point that we've already seen the worst of a downturn. It wasn't a recession, but we definitely saw a growth slowdown at different points in 2023. And we think the trajectory for 2024 is a little bit more positive, not in a huge way, but a little bit more positive. We're not seeing, issues from a credit market standpoint at this point. If you look at the high yield market from a credit market standpoint, one of the, the ones that would suffer first, they're at all-time heights from a spread standpoint and continued good results from a performance standpoint. So, we think that the 2024 outlook is one of probably clipping coupons from a fixed income standpoint and moderate growth from an equity standpoint that is overall pretty positive for the consumer. I think at this point, when we look at inflation, that really is the key. If it takes a different path than what we expect, perhaps that outlook is different. But for now, that's sort of what we're sticking with.
So there's nothing in the internals when you look at the labour market, when you look at the consumer, that is suggesting that either one of those metrics are going to roll over at this point in the cycle.
There are certain things. Definitely the mortgage market is slower than it has been, and interest rates are higher, so that's not all that unusual. That path would be the one to go. But when you look at the metrics around the mortgage market, delinquencies, charge-offs, non-performers, those continue to be quite good. Consumer credit is getting extended again, is a little bit higher than it certainly was through the pandemic years and after that with all the stimulus that was out there. Yet it doesn't seem to be something because of the wage side of the equation that presents a huge, what I'll call a wall of worry. That just isn't the case with that. So, our products at this point are within their strategies looking to extend, be a little bit longer from a duration or a weighted average maturity standpoint. And from strategy to strategy, looking to take some of the, additional risk by going a little further out the yield curve and maybe keeping some of that coupon for a longer period of time.
Deborah, thank you very much indeed for that. We will catch up with you later on in the programme. Perhaps we'll get into the rotation and value versus growth in these markets. Deborah Cunningham there. Right, exit polls show that Vladimir Putin is set to secure another 6-year term as president of Russia. NBC's Keir Simmons is in Moscow and joins us with the latest. Good to see you, Keir.
Hi, Martin. Well, it's just after midnight, 1 a.m. here in Moscow. And you're right, those exit polls just emerging. And what they're telling us is that with 81% of the ballots counted, President Putin, according to the Russians, has won 87% of the vote. That is a bigger vote for President Putin than in 2018, his largest vote in his 24 years of leadership. And not only that, but also the turnout, the numbers of people who voted, according to Russian officials, is greater than it has been in the past. There are going to be many around around the world who are going to question these figures. There are some regions here in Russia that are saying that they have had more than 90% turnout, and certainly the widow of Alexei Navalny, who died in a Russian prison during this election campaign, is calling on leaders from around the world not to recognize this Russian election. So what was frankly always inevitable has come to pass. President Putin will now have another 6 years as president of Russia. He changed the constitution so that he can stand again after that, so potentially for 12 years after 24 years of leadership.
Keir, very quickly, I understand that Putin's already had a press conference, which you were able to be there. How did that go?
That's right, and we were NBC News. We were the first international news organisation to ask him a question since his election. We asked him about Evan Gershkovich, the American journalist in jail here in Moscow. We asked him about Alexei Navalny, and we also asked him why Boris Nadezhdin, who is opposed to the war in Ukraine, was not allowed to stand in the election. His answer was quite fulsome, but to sum it up, he threw his arms up and said, "That's life." He did confirm reports that, according to President Putin, a deal was being done to release Alexei Navalny to the West just before he died in that Russian prison. Again, there will be many who will be very skeptical about that from President Putin. But certainly, as you know, Alexei Navalny was his most outspoken critic. And today, just to finish, today we saw lines outside polling stations at midday. That was what Alexei Navalny had asked for, to protest this vote. In a number of other ways, we've also seen opposition to this election, despite the dangers.
All right, Keir, excellent. Thank you for your time and your coverage there. Keir Simmons there live for us over in Moscow. And you can keep up with the story. All you have to do is log on to our digital arm, CNBC.com. And you can also keep track of the latest in business and financial news by joining CNBC International on WhatsApp as well as Telegram. All you have to do is just scan the QR code right there on your screen, and you'll get real-time alerts delivered straight to your phone. We are back in 2.
In a world of uncertainty and disruption, how will your investments stay resilient? We've been navigating change for 125 years, always looking forward, anticipating risks, and trusted to manage over $1 trillion in assets worldwide. Solving for the needs of investors today and tomorrow. That's the power of Nuveen.
Money, real debate, real-time moves. Scott Wapner and the Halftime Committee break down key trades. Get an edge on the market's next move. Halftime Report, live from the New York Stock Exchange. CNBC.
The Power Plays are here, breaking down the markets with updates and deep dives. What's moving now and what's next for your money. Sarah Eisen, Carl Quintanilla, Money Movers. Weekdays, CNBC.
From interest rate paths to economic slowdowns, geopolitics to local politics, 2024 is serving up a host of challenges for Asian businesses.
How are top leaders rethinking their plans, and where are they putting their capital? Hear what the C-suite has to say about confronting challenges and adapting leadership in disruptive times.
Get it straight from the C-suite, Tuesdays on Squawk Box.
Welcome back. We are on data watch in China today. Retail sales will be the one to watch. Sales expected to have grown just 5.2% on year in February, slowing from the 7% expansion the month before, indicating consumer sentiment remains tepid. Industrial output also expected to have cooled slightly from January, growing 5% on year. That set of monthly indicators due around 10 a.m. this morning. In the meantime, bank loan data was out after the market closed on Friday, showing new bank lending falling more than expected in January. Reuters calculations show Chinese banks extended about 1.4 trillion yuan in new loans in February, falling sharply from nearly 5 trillion yuan in January. Let's get back to Deborah Cunningham from Federated Investors. Deborah, thanks for staying with us. When you look at the price action in a lot of the big MNCs exposed to China, I'm thinking about Apple, I'm thinking about Tesla, is that telling us that the spillover is finally starting to bite on the US markets?
Well, we've been waiting for that spillover to happen now for a year. And it always seems to be maybe a month or two into it and then rebound. So I'm not quite sure yet at this point. I think perhaps there might be a little bit more growing evidence of that, within the various, sort of more heavily exposed firms to the Chinese economy. But I think it takes more than a month of data to make that assertion. So I'd say the jury's still out on that one.
Right. So for now, at least, is the US exceptionalism narrative the default proposition? Do you want to be overweight US equities? And if so, Deborah, in the global context, how are you approaching the value versus growth, the rotation theme at this point? And how are you expressing that? Is a barbell strategy or what exactly?
Well, we're definitely expecting the U.S. to grow more in 2024 than in 2023. We think the slowdown hit its, trough, if you will, back in the second half of 2023, and that we'll be slowly climbing out of that. Having said that, that makes a pretty good case for value in the market, and so we are more overweight along those lines. But we're not counting out the growth side either. I think what will be very likely in 2024's equity return will be more diversification. So you won't have the return in the index being comprised of the return of 5, 6, 7 stocks in the index. It will be more comprised of a broader base of firms as well as industries that tend to do a little bit better with a broader economic rebound, even if that's not like a high growth type of rebound.
Deb, with the Fed on the cusp of pivoting, right? And I think we both agreed it's probably going to be around halftime or June, right? Potentially that could light a fire under long duration fixed coupon instruments, yes, but you continue to think that floaters are still the place to be. Tell us why.
It has a whole lot to do with the spread in the floating rate product at this point. Sometimes, even though it's against what you would necessarily do from a market call standpoint, so we do think rates will go lower, and obviously then the index off which a floating rate security is based would be lower. But if you've got value from a spread standpoint, and what we're seeing in spreads in most of the floaters in, sort of the high quality, minimal credit risk type of security and issuers that we deal in on a day-to-day basis in the money markets, we're seeing spreads that are still pretty much 1.5 to 2 times higher than their average normal. So we think that makes them more attractive, continue to be attractive, even in a market that you might question, why would you do that from a strategy standpoint?
Okay.
How do you feel about small caps, Deborah?
Well, I think those go along with sort of the growth scenario. You know, you've got some that will be it will be depending upon what the small cap industry is, who their trading partners are, will help determine how they go forward. But in a growing economy, basically that lifts all tides, all ships, and we don't think that small caps are out of that race at this point. Probably just, again, similar to what I was saying before, a little bit more diversified across a universe of small caps, not just 1, 2, 3, or 4.
Deb, real quickly, back to paper. Fed hasn't cut yet, and we're still at peak rates, right, which is making a lot of folks go and stretch. You talked about spreads to junior subordinated debt. Is that a good place to be for you?
It depends on the issuer. It's not something that we would play in from a money market standpoint, but our short-term bond funds are, micro short, ultra short products. So just a step out the yield curve and a step higher in risk. Those make some sense, but it's really institution dependent. So there are certain banks, certain auto companies, certain, manufacturing firms that we think it's a great play to go down the credit curve within a company, whereas then there are ones on the other side of that equation that we would stick with only the senior debt.
All right, and in some cases, subordinated bonds can actually give you a better return than senior maturities as well. Deb, listen, we got to go. Fantastic. Yeah. Fair enough. Good to talk to you. Appreciate the time. Keep safe and warm. Do it again very soon. Debbie Cunningham here from Federated Investors joining us live. We will be back in 2.
In the past, garment producers had to order 10,000 or 100,000 copies of a garment. The on-demand business model allows us to produce very small initial batches, usually between 100 to 200 copies of a garment. This allows us to determine whether or not there's demand for a design. We're able to dramatically reduce the waste associated with traditional retail models and reduce unsold inventory levels to the low single digits. This allows us to pass on significant savings to our customers, sometimes between 20 to 30% of the cost of goods sold of a garment. It also allows us to be a truly customer-led business where we can identify what our customers want to wear and make clothing that allows them to self-express through that clothing. We've identified new and emerging designers who we've entered into an incubator system where they will create a capsule collection for us, and they can use our production capabilities and our marketing capabilities to reach a larger new audience through our platform.
Welcome to Closing Bell. Let's get into the market right now.
Breaking news, market moves,
what it means for your money in the days ahead.
Scott Wapner from the NYSE. Closing Bell, CNBC.
Whether you're a couple of steps ahead or not, I think is irrelevant. It is a movement that will transform countries over the next decades.
On the next Managing Asia, the people behind Ayala, steering the EV revolution in the Philippines.
When we do something, we want it to scale. So our vision for EVs is it becomes a real component of the Philippine transport sector.
Catch more of my exclusive look inside Ayala Corporation only on Managing Asia.
Welcome back. Monday morning here in Moscow, Asia. So we finally have a date. India's election authority has announced the timeline for this year's general election. The lower house of parliament, the Lok Sabha, will be elected over 7 phases starting April the 19th. We'll get results on June the 4th. Now, these are the world's largest general elections with nearly 1 billion people eligible to vote across nearly 24 parties. Prime Minister Narendra Modi's party is tipped to win comfortably and secure him a 3rd term as Prime Minister. In the meantime, the UK says it is putting a trade deal with India on ice until the elections are over. Trade talks wrapped up last week without any agreement. Sri?
Martin, in the Middle East, Israel's Prime Minister Benjamin Netanyahu says the country's military campaign in Gaza will continue. Netanyahu lashing out against increasing global pressure for a ceasefire. German Chancellor Olaf Scholz, the latest world leader to call for peace in the region. He spoke with Netanyahu in Jerusalem over the weekend, and he raised his concerns about the surging number of civilian casualties in Gaza and the risk of starvation amid dwindling access to aid.
But Netanyahu's leadership is getting challenged by leading voices in the U.S. Senate. Senate Majority Leader Chuck Schumer, a strong supporter of Israel, called for elections in Israel last week, saying that Netanyahu is the obstacle to peace in the region. Netanyahu said that Schumer's comments were inappropriate. All of this as thousands of Israelis also gathered in Tel Aviv over the weekend to protest against the Prime Minister.
Coming up, we'll discuss the Forex action as we ramp up to the Fed meeting and after. We saw the US dollar rise to a more than 1 week high on Friday following a mixed batch of data. Francesco Pesolet of ING joins us after the break.
Squawk Box is breakfast with the most interesting people in the world.
It's a privilege to get to talk to them every day.
It's more entertaining than any other morning show, but you might get some useful information.
Squawk Box, weeknights.
The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
We're moving from the autopilot era of AI to co-pilot era of AI.
We are just at the dawn of the robotics age.
The more experience you give it, the more capability this AI model can achieve.
Hopefully improves productivity, and it doesn't displace more jobs than it creates.
How to maintain our humanity if we live more and more digital lives.
The new era of tech on CNBC.
For as long as I can remember, I have always considered myself pretty ambitious. I always wanted to be a television journalist. When I started out covering foreign exchange, I actually taught myself how to trade currencies because I wanted to understand what people wanted to know. My grandfather, who was a Holocaust survivor, inspires me every single day. And growing up, he always used to have CNBC on in the background. Every day is fun covering business news. Every day is different. It is never boring.
CNBC. Live ambitiously.
Welcome back. Monday here on Squawk Asia. One of the key risk events for this week is the Federal Reserve, which meets and decides. We'll also get the Fed's latest dot plot or economic and policy projections. No change expected at the meeting, but after 2 months of inflation reports that have shown little progress towards the Fed's 2% target, there is risk the Fed will project fewer rate cuts this week. CNBC's Steve Leisman with a look ahead.
The median Fed official in the December forecast expected GDP at 1.4%, but the economy is running faster than that in the first quarter. Core PCE down at 2.4%, but Wall Street thinks the February number will come in higher at 2.8%, and the Fed funds at 4.6%, or 25 basis point cuts. The median 2024 projection in the middle at 4.6 for 3 cuts, but if just 2 of the 19 officials decide the Fed should cut only twice, well, the median moves to 2 cuts. For the Fed, it comes down to a question of how to think about the past 2 months of inflation. Are they a sign of stalling in the progress or just noise? Is the progress expected for this year going to be delayed into next? Joe Busuelis of RSM says there are risks to the outlook. With the economy continuing to outperform and consumers still resilient, the Fed might be far more patient on rate cuts than either its forecast implies or the market has priced in. Futures markets began the year looking for 160 basis points of cuts, which would bring the rate down to 3.8%. A lot of that's gone now. The contract trades at 456 with just 80 basis points of cuts built in, or right about where the Fed is now. So the question is whether the Fed moves that forecast, and markets have to price in the risk about both when the Fed begins cuts and also by how much. Steve Leisman, CNBC Business News.
The Federal Reserve is one of several central banks meeting this week. This side of the world, we'll also be hearing from the Bank of Japan, an important one, a Reserve Bank of Australia and Bank Indonesia. Take a look at the Forex space and let's zero in on the DXY dollar index. 103.436. 104 is a much talked about upside number just ahead of the Fed. Let's bring in Francesco Pesole now, FX strategist at ING. Francesco, great to have you on the programme. The Fed can still sound relatively optimistic about disinflation next week. So you say, is that going to dent the dollar, or is data dependency still going to outflank the forward guidance?
I absolutely think that data dependency remains the name of the game and will remain the name of the game. I think that the recent price action has been quite interesting from this standpoint. Markets were expecting a hawkish testimony by Powell at Congress, and then it turned out to be a bit more dovish than expected. So markets moved on the back of that, but then data again argued for more patience than rushing when it comes to talking about rate cuts. And I think we'll be left pretty much with the same. I mean, markets can be moved by the fact that the dot plot can change. I mean, only two members need to change their opinion to move the dot plot higher or lower by one rate cut by the end of the year. But ultimately, the message should be, once again, data dependency. And I don't think that this meeting will be all that important for the dollar.
Right. And you see no strong reason as to why DXY should not go back to 104 before the Fed meeting, even if Chair Powell sounds relatively optimistic about moderating inflation. Could we still yet see a stronger DXY level?
Yeah, absolutely. And that's because really the underlying rate advantage of the dollar is still there. Dollar rates have rebounded. And the fact that Powell remains optimistic on inflation, it does not mean that he is promising rate cuts, even if data moves the other way. And I think markets in the past week, especially in the latter part of last week, they were really starting to get a bit concerned that this may linger on for longer, and that the dollar retains a very positive yield advantage, and there are no very strong, compelling reasons to turn bearish on the dollar just yet.
How volatile is dollar yen going to be this week with the BOJ? Because we were talking offline about local media suggesting that the BOJ is going to make a move this week. You think that it's going to be likely as well, based on markets, but you still have some doubts. Just walk us through why.
Yeah, so on the first question, yes, it is going to be volatile. I have few doubts about it. Market pricing is not very conclusive of what is going to happen this week. They're not 100% convinced that the Bank of Japan will hike rates. I think if the reason why I mentioned I have doubts is because if we had not seen those media reports on Thursday and Friday saying that, kind of suggesting that the BOJ would hike this week, then we would have not really called for a hike, because despite the very surprising result of wage negotiations in Japan, there was still some data that the Bank of Japan might have wanted to take a look at, a bit of discussion with the government, and that April just looked a more viable option. Now, obviously, given that we had more than, I think, one report currently suggesting that they will hike this week, then obviously it is getting likelier and likelier. I just think it's going to be a very binary event for the yen.
All right, now I have to note, I think right now we're at about a 2 and 3 chance, around about 60% chance that the Fed is going to move earlier than expected come tomorrow. In terms of the sourcing and the attribution, Francesco, I think what you're talking about and what has a lot of people scratching their heads is I think it first broke that the BOJ would move early, that is tomorrow, by GG, right, which is a wire service and which is very, very fast, but not always terribly reliable. The problem is it's also been picked up by the Nikkei now. The Nikkei has a pretty good track record of usually being right.
Yeah, that is why I think it is looking increasingly likely, mostly on the back of that. I think what we're discussing now with our clients and is really very much saying, yes, that's what local media are telling us. But, if we had not read those media reports, we would have probably not called for a hike.
So help me figure out the pricing. Ahead of this meeting, we've had these GG reports and now Nikkei as well. They're going to do it on Tuesday earlier than expected. Yet, we've been watching yen go the wrong way. You would have thought it would have been strengthening. How much of this is simply down to the yield differential advantage still very much in the dollar's favor, especially after the most recent data?
Look, we were really trying to make a point, a very important point to us here at ING when it comes to the yen in recent weeks, and that is really the yen cannot rally solely on a good domestic story being the BOJ hiking rates. If they hike this week or they hike in April, it does not really materially change the outlook for the yen. What can really change dramatically for the yen if US data starts moving in the opposite direction and the Fed really does cut rates in June. That changes completely the outlook for the yen. So we still think that it kind of takes two to tango for the yen. You need the Fed and the BOJ, and the BOJ is going to hike tomorrow in April. Doesn't make a huge difference for the FX markets, but it's much more of an open question when it comes to the Fed. And that is why we think, the yen continues to underperform.
Okay, it's going to be limited or constrained, understood by the Fed. Listen, Francesco, fantastic talking to you. Appreciate the time. Thank you. Keep safe. We'll do it again very soon. Francesco Bisoli there from ING joining us live. All right, a couple other stories we're watching for you this morning. All eyes on NVIDIA. The company's GTC kicks off today. This is an annual tech conference targeted at developers, engineers, also researchers, with CEO Jensen Huang set to take the stage with a 2-hour keynote. Huang is expected to outline the company's latest artificial intelligence products and also other new technological advancements in the pipeline. We'll have to wait and see if it triggers a rush of new orders for NVIDIA as well, at a time when demand for the company's products are already high. The stock is up 77%, more than that, in fact, so far this year. Sri?
The hype over artificial intelligence is expected to boost revenue for other tech players as well, not just the chip makers. The CEO of Taiwan's Asus telling CNBC's Emily Tan that the company wants its AI personal computers, PCs, to be a big part of its growth strategy. Here's a slice of their exclusive conversation.
Actually, this year, the PC demand is not so strong. I think the mainly is because the economic status. So actually, from currently our sales order, our Q1, the PC shipment number were around 3 to 4 million. So that's a little bit flat. But because from the IDC, I think the whole year, the PC TAM growth were around low single digit, maybe 2 to 3%. So the growth rate for the whole year PC shipment number is almost flat compared to the 23. So that's the Q1 status for the PC.
The global PC market finally returned to growth in the final quarter of last year after 8 straight quarters of decline. That's according to Gartner. They have a growth prospect of 3.5% for overall PC shipments this year. How big of a boost are you expecting from hardware-enabled AI PCs, and when do you expect that to kick in?
Actually, I think this year the AI is a very hot topic. So I think everybody wants the PC have the AI capability. But because the AI PC combines 3 factors. First is the hardware. The second is the OS. The third is the application. So because Microsoft, they will release the new OS to support the AI function in the second half. So the AI PC shipment will start from the second half of this year. So from our point of view, the AI PC share in this year were only around low single digit. So, but ASUS have the strategy. We would like to be the first and the leading position for AI PC. So we will co-work with those vendors to provide our solution first to the market.
Right, elsewhere, China's JD.com has walked away from its offer to buy Currys, which is a British electrical company. JD had floated the offer back in February and said it aimed to use Currys' network to tap into the UK market. But it announced on Friday that it is no longer interested in the acquisition. Shares of Currys slipping 4% on the news, Sri.
Got my first Walkman from Currys.
Oh, well, you know.
Very happy memories, especially when you unbox it, that new Walkman smell. Yes.
Yeah.
Loved it. Yeah. Memories. Moving swiftly on. Up next, our exclusive interview with a green graphite producer. Graphjet Malaysian firm just went public on the Nasdaq last Friday. CEO Aidan Lee joins us coming up next.
Can't miss reporting that impacts your money now. Be here when the opening bell rings. Squawk on the Street. CNBC. The day's top stories driving Wall Street. Tyler Matheson, Kelly Evans, Power Lunch. CNBC.
There's a huge hype around AI and what that cycle is going to bring.
Ultimately, it's the infrastructure players that continue to win out in this sort of AI boom we are seeing.
AI is quite possibly the defining technology of this decade, maybe even of our generation.
This is an AI revolution, and it's really, I think AI is everywhere, but it's not only happening in the data centers, it's happening on devices.
AI is really a critical part on our product development, but it also goes into our product.
Our goal is to democratize supercomputing for everyone and get access to them to improve business productivity, to get better insights from the data.
This is not about artificially, creating solutions. It's not about replacing people. It's about augmenting capabilities, competences, skills.
It is the year of AI, and it's ironic. This conference for almost a decade was all about 5G, and now this year it's the AI conference.
On a $100,000 margin loan, Interactive Brokers charges just 6.83%. Do you know how much your broker charges? Fidelity and Schwab charge over 1.5 times as much. E-Trade and TD Ameritrade are even higher. Move your account to Interactive Brokers and save at least $5,200. Or much more if you're trading big bucks.
This FYI is sponsored by Interactive Brokers. Direct market access to stocks, options, futures, forex, bonds and ETFs. One world, one account.
China monthly activity indicators due this morning at 10 o'clock, 30 minutes after the market opened. The February figures overlapping the Lunar New Year period, so there will be some seasonality and distortion with this set of data. Hong Kong unemployment numbers due out after the market close. Hong Kong inflation figures posted on Thursday, and Taiwan unemployment due on Friday. The People's Bank of China will publish its loan prime rate on Wednesday, and Taiwan's central bank will hold its first policy meeting of the year on Thursday. On the earnings front, 30 Hong Kong blue chips will be reporting this week, including Tencent, Ping An, Xiaomi, Geely Auto, and Kuaishou Technologies, just to name a few.
It's a mega AGM week in South Korea. Close to 370 listed companies will be holding their shareholders meeting with a big focus on the government's campaign to boost the local stock market's value. Samsung Electronics AGM is happening this Wednesday, Hyundai Motors on Thursday. And for your eco data, February factory gate prices will be released on Friday.
On Monday, we'll get the latest data on home builder sentiment. It will show how builders are feeling as mortgage rates stick stubbornly around 7%, and more existing inventory finally comes onto the housing market. Super Microcomputer will join the S&P 500 on Monday. Shares are up nearly 300% this year, driven by the artificial intelligence boom. Deckers Outdoor will also join Super Micro on the S&P 500. They will replace Whirlpool and Zions Bancorp in the index.
This FYI is sponsored by Interactive Brokers. Direct market access to stocks, options, futures, forex, bonds and ETFs. One world, one account.
Interactive Brokers pays up to 4.83% on instantly available U.S. dollars in your brokerage account. How much interest can your bank or broker pay? Interactive Brokers' conservative and prudent risk management uniquely positions us to pay up to 4.83% on uninvested, instantly available U.S. dollars in your brokerage account. The best informed investors choose Interactive Brokers.
Squawk Box is breakfast with the most interesting people in the world.
The ultimate pre-market morning news show. Squawk Box. CNBC.
From Beijing, where we've just learned that China is targeting around 5% GDP growth this year.
5% is not going to be easy. They worry about the labor market weakness. The old model of a property infra-driven economy, we have to rethink it.
What is going to be very important is how the private sector responds to what it's hearing from the NPC and from Beijing. And I think at this stage, the private sector is not getting very much.
Inflation may rise, but setting a target of 3%, that at least show the intention to generate a moderate rise of the price level.
Chinese consumers don't seem to have a problem with the amount of money they have, it's the amount of confidence they have.
It is impossible to replace China as a supply chain center. For the long term, I think the investors still have confidence, but in the short term, I don't see a point for them to rush back into China.
The government seems to be much more benign where they are. They recognize the difficulties, but not as serious as the investors.
Reddit is set to go public on Thursday. On Wednesday, it's setting its IPO price, targeting a range of between $31 to $34 a share. Sources telling Reuters that the social media platform will likely hit its targeted valuation of $6.4 billion as its IPO is nearly 5 times oversubscribed. Reddit is hoping to cash in on its retail investor base. About 8% of its offered shares have been reserved for users and moderators on the platform, Martin.
All right, here's the news stock. Malaysia's Graphjet went public in New York Friday. It's a so-called green graphite company, meaning its technology can produce graphite and graphene from agricultural waste, specifically palm kernels. The company aims to cut the industry's carbon footprint and to muscle in on a market that is right now dominated by China. Graphjet raised about $5.8 billion from its listing. It finished, though, about 10% lower from an issue price of $13 a share. Last done $11.80 right now. For more, let's bring in Aidan Lee, CEO of Graphjet. Aidan, good to see you and appreciate your time, and thank you for joining us. So I'm not going to say congratulations since it looks like the IPO is off to kind of a weak-ish start. But, I mean, look, let's talk about your value proposition. Since China banned the exports of its own graphite several months ago, right, it seems as though you've got a pretty interesting space to carve out for yourself. On top of that, you're doing it cleaner and also greener. I get that. Here's the catch, though, and the but. The whole EV industry, now I have to note for viewers that graphite obviously is a key component or ingredient in EV batteries, right? Next-gen batteries are moving away from graphite, are they not, and to silicon. So are you a step behind right now or not?
No, you're raising such a good point on the graphite materials, whereby graphite has been such a critical raw material for battery, which is served as anode material for the battery, because nobody is able to source such as a good raw materials outside China. It's been such a big challenging around the world, not just North America, Japan, South Korea, in Asia. Everyone is facing problem is sourcing the graphite outside China. So hence the silicon come in and it tend to replace the graphite assistant in the battery materials. But looking at the technology right now, I think graphite was still the one of the most important and critical raw material for anode material right now for the battery. That's definitely for sure.
For how long, though, with silicon batteries on the way and also with synthetic graphite already available?
Yeah, I don't think I'm at the right position to comment about silicon technology because every manufacturer do have their own patent technologies. We don't know how fast or how soon the battery will able to adopt the silicon's raw materials. But however, for graphite, I think at the moment, at least down the road for 5-10 years, graphite will be still the critical raw materials, and that's also one of the reason why the North America, United States of America, that declare this such as a national security threat to the country because of the raw materials sourcing problem outside China. Since China has started to impose a ban of export of graphite last year, December 1st. This is such a great news for GraphJet, of course, but it's kind of a geopolitical place in terms of US-China trade war, and we're caught in between, and and we are Malaysian, and we try to be neutral, and that's our position as for now. Yeah.
That's a really interesting point, Aidan. And can you give us a sense of what production levels you are targeting at GraphJet, and how do you scale green graphite? And in volume terms, when will it really start challenging and making a dent in China's dominance in market share of this critical resource?
Yeah, thank you for such a brilliant question, Martin. Sorry. And talking about the production, we try to scale ourselves to up and running the productions at Q2 this year with 3,000 tons of graphite by Q2 this year. That's our targets, and up and running and to deliver to our customers, which is Toyota is one of our off-taker for our graphite. And Q2 definitely will be on time. Everyone's on time, and manufacturing plant are on time. Machinery, tune and finance on time. And talking about scaling out ourselves in terms of 2-fold, 3-folds, we have to partner with Fortune 500 companies. We are in conversation with few Fortune 500 companies, MNC conglomerates to really scale us up. And we're working on the joint ventures methods, and we try to use their facility. There's a lot of players that try to run the production of graphite, but they fear to keep the graphite up to expectation or the quality to serve in anode metal. So we try to use their equipments and manufacturing plant, to scale out by using a technology transfer for the country, and that's the most efficient way for us, to scale ourselves out.
Understood. Aidan, you've got supply deals, you said, with several Fortune 500 companies, $30 million offtake agreement with Toyota Gosei. Just give us a sense of how political these supply deals are, and does it necessarily mean that supplying BYD, China EV makers, for example, that's off limits?
I don't think BYD will require our products at the moment because, China has actually dominates 97% around the world for graphite. And that's for sure. That's why we put ourselves in North America, listed on the NASDAQ, and we try to raise as much capital as we can, put ourselves, in North America, having better exposure. We set up our office in Nevada. We're exploring in Texas, Kansas, to really look for a good opportunity and also strategic partnership to work with to scale ourselves up in terms of ex-China production and to reduce the dependency of China productions. So that's our aim,
Right. And you're really emerging or have emerged as a national champion for Malaysia. You're getting NIMP 2020 funding, 2030 funding, from Malaysia. You're playing a central role in building out the high-value segment of Malaysia's economy, Aidan. So are you open to considering a future secondary local listing back home in Malaysia?
This is such a good question. Also, one of our strategic gameplay. As for now, we were still focusing on Nasdaq. If talking about dual listing on locally in Busan, Malaysia, they were still under our options, of course, and we're also considering in UAE, Middle East country. That's also one of our options. Of course, Singapore will be one of our good options as well, and because Malaysia is so close with China right now. And even though we are under some Malaysian government that award us on the NIMP programs, this NIMP program will serve as a private company entity and to hope to contribute better GDP value to the country and also create more job opportunity locally instead of political links in between, China and Malaysia and Malaysia and US. We don't really play ourselves in terms of political role, but we keep ourselves neutral in terms of business to create an ecosystem, a green supply chain ecosystem for around the world as China. And everyone deserves a better quality of graphite and a more affordable graphite and outside China and east in Malaysia.
Aidan, we've got to leave it there, I'm afraid. It's a fascinating conversation. I wish we had more time, but perhaps we could catch up at a later date. Aidan Lee, there, CEO of Graphjet. Thank you, sir. Right, back to the markets in our region. Markets in Australia open in just a couple of minutes. We'll bring you the opening trades in Sydney when we return. 2 minutes.
On world markets, first to the global business conversation. Get a jump on the investing day every day with Frank Holland. Success starts early. Worldwide Exchange. CNBC. Next, Sarah Eisen's full interview with Saudi Aramco CEO Amin Nasser.
You pulled off the biggest IPO in history. There are questions about whether you would consider a secondary listing. Do you think that we are looking at peak oil globally?
In the U.S., per capita is 22 barrels. In Europe, it's 9 barrels. In Asia, it's about 22 barrels. So there is room to grow.
Amin Nasser, a CNBC Leader Special.
Every new vehicle we put out, we're improving fuel economy and emissions.
We need a balanced and a fair energy transition for everyone.
The total value chain of battery will be very important.
Improve our operational efficiencies and reduce the consumption of natural resources.
Environmental sustainability is a must, and energy security is another pillar.
Renewable energy is cheaper than electricity made from fossil energy in 90% of the world already today.
Fostering sustainability on CNBC.
My earliest ambition was to be a teacher, but I felt I couldn't afford it. My mother thought it was the highest calling, and I gave her a promise that one day I would be a teacher if I did well enough in life. It was my ambition, and I was able to achieve it. So now I can teach you so that you can be as ambitious as you want about whatever you want to do. CNBC is my home. If you love your work, well, maybe it's life itself.
Good morning, everybody. It's a Monday. This is Squawk Asia, 7 o'clock in Hong Kong and Singapore, 8 up in Tokyo, and 10 down Sydney side. I'm Martin Sung live with Sri Jagaraja. These are your headlines at this hour. So markets are starting off a fresh trading week on the heels of a losing one on Wall Street, with the Fed squarely in focus. No change expected at Wednesday's the conclusion of the meeting on Wednesday, but investors are going to be watching the so-called dot plot to see if it scales back projections for 3 rate cuts this year. Another pivotal meeting also taking place in Asia. The Bank of Japan, BOJ, kicks off its two-day meeting later today, with markets watching for a major policy shift after Japan's biggest companies agreed to the largest pay hikes in more than 30 years. And we're bracing for a clutch of monthly economic indicators out of China this morning. Industrial output, also retail trade, both seen falling from the month before as calls continue to grow for more government stimulus to get the economy back on its feet.
Right, markets in our region, this is how they are shaping up. Let's give you US equity futures first after Wall Street closed lower last week. A degree of stability, but it's still very, very early hours, of course. We're all waiting on the Fed. Australian markets just coming online. Looking like this, flat at the open, 7,672. Japan opens in the next hour. CB Nikkei futures stacking up like this. Important week for Japan, of course, with the BOJ and expectations that they could start exiting and announcing an exit from ultra-easy monetary policy. Nikkei futures, 38,885, so suggesting bit of a notch higher for Japanese equities. Dollar-yen rates, we're all watching that one as well, 149 even or thereabouts. In the meantime, we're on data watch in China today after some disappointing bank loan data last Friday. Sam Vadas has the details. Is there going to be anything consistent in here, Sam, with perhaps green shoots?
Well, we've seen the trade data and the CPI looking fairly encouraging so far, Shri, so we could perhaps see some follow-through, as you say. But we do need to keep in mind there are some distortions caused by the Lunar New Year holiday with this data. Many economists pointing out it's important to look at the January-February trend, but also, of course, we do have some base effects playing into all of this, given that we did see the post-pandemic rebound in January and February last year. So let me run you through the numbers in terms of the expectations for today, if we can bring up that wall. So retail sales are expected to come in up 5.2%. So that was compared to the 7.4% that we saw in January. So slightly lower, but of course capturing the Chinese New Year holiday. So there are some base effects to take into consideration here. Industrial output up 5% from 6.8% we saw in Jan. And then the FAI, the fixed asset investment, 3.2%. That is that year-to-date number. Unemployment is also something we're watching today, particularly given the government has said that they are going to look at creating around 12 million urban jobs this year, 5.1% that currently sits at. So that is something, of course, to watch out for. It does come off the back, as Shri pointed out, that bank lending data we got out last Friday. That was after the bell. And what that was showing was it came in lower than expected and actually at a record low. So February new loans, 1.45 trillion yuan, slightly lower than expectations, off that record high in January. But of course, we do know that they tend to front load some of those loans to capture those high quality customers. M2 money supply was also down compared to the forecast, so actually it was up 8.7%, but lower than what they were looking at. And TSF was also slightly below the expectations there. In terms of what the analysts are saying about all of this, ING out with a note saying that last year's data may have been stronger than expected, as I was just pointing out, because of the increased loan demand after the pandemic restrictions were lifted. So it's important to look at the trend. They're also saying that although the PBOC has signalled further RRR cuts to come, next month's data should be more useful in ascertaining whether we're actually seeing sluggish demand or whether it was down to that holiday season at the moment. So the Goldman Sachs analysts have also said, interestingly, Marty, that the bank lending to non-bank financial institutions jumped to the highest level in 2015. That's to support the national team buying into the stock market. So that's an interesting data point also to look out for. But in terms of the policy response, we've had no change to the MLF rate last week. We've got the interest rate decision on Wednesday from the PBOC with the LPR. The expectation is no change to that, particularly as we haven't seen further cuts to the deposit rates yet. And still uncertainties around the Fed, as we've been talking about.
Indeed, yeah. So Mr. Wang, that is Wang Yi, China's foreign minister, heads to Canberra this week. Yeah, and interesting, the timing, the announcement nailing down that date for the visit came pretty soon after China basically said, look, the 200% tariffs on Aussie wines, we'll get that a pass, maybe.
Yeah, I think wine is going to be very much on the table, whether it'll be literally on the table? That's the big question. But certainly this is a big talking point because, of course, China has these up to 200% tariffs on Australian wine, coming off the back of this dispute back in 2020 when, of course, Australia was looking into a probe into the origins of COVID-19. So what we've seen in encouraging signs so far is that China has been lifting some of these restrictions and duties on lobsters and coals, but really it is the wine that many are looking to see have those restrictions lifted, because this has been very much taking a hit to the Australian wine industry. So this is Wang Yi's first trip to the Antipodes in about 7 years. He'll be heading to New Zealand and Australia. It started yesterday. He'll be there till Thursday. One meeting that's very important to keep an eye out for is the meeting with the Foreign Minister over in Australia, Penny Wong. Of course, he has met her a few times before. Of course, Albanese was just in China, the first Australian leader to visit mainland China in around 7 years as well. So we certainly have seen the relationship improving under the Albanese government. No doubt other areas with regards to trade, security, tourism will be discussed. There are calls for Australia very much to press China on human rights. Of course, we do have this Australian writer Young with a suspended death sentence over there, which Australia has said is appalling. But of course, when you look at the Antipodes as a whole, Martin, we know that New Zealand and Australia have shared concerns about security, particularly on their doorstep with what's going on with China's growing influence in the Indo-Pacific. So we know that there are reports also that New Zealand is quite keen to join AUKUS, and that is something that China has been very, very concerned about as well, in terms of this sort of ganging up and bullying on China.
Yeah, understood. Okay, we'll be watching that trip, see how it goes. Thank you. Excellent as always, Sam Bottis. All right, so back to markets. It is, of course, going to be a big week for central banks. The big one to watch, of course, is the Fed. That decision due out Wednesday, stateside. We'll be talking about it on Thursday, our time. The Fed not expected to move on rates, but markets are keeping a close eye on its quarterly economic projections, the so-called dot plot, which could give us an idea of just how many rate cuts we could see this year. Is it still going to be 3, for example? This side of the world, we'll be hearing from the Bank of Japan, also BI, Bank Indonesia, and also the RBA, Reserve Bank of Australia, all of them this week. The BOJ is expected to start signaling a shift away from its ultra-easy monetary policy. That move could come as early as tomorrow, and it may not just be a signal, it could actually be a move itself. And this is after last week's annual Shunto spring wage negotiations ended with a massive bump up in pay. Japan's Confederation of Trade Unions, Rengo, said Japan's biggest companies have agreed to the biggest increase in wages in 33 years, Shri.
Martin, let's bring in Kerry Craig for a steer on these markets, global market strategist at JP Morgan Asset Management. Kerry, good morning. Always great to have you on the programme. Let's start with the Fed. And if Chair Powell is less dovish on account of the upside inflation surprises we've seen in the data, then can markets handle that?
Good morning, Shri. Well, I think the markets really have adjusted to the reflection that you are going to get, 3 or so rate hikes, 3 or so rate cuts this year, which was what was in line with the last statement of economic projections. Obviously, the stronger CPI numbers, the PPI numbers and the import numbers that came out last week have kind of added to the market concerns that inflation isn't going to go down as fast as they had been hoping. But I think it is still a case that the trend for inflation is one that's going to be lower. As long as you're on that consistent trend down, the Federal Reserve will have some faith that it can start to cut policy this year. Those insurance cuts come through. And while the economy has been resilient, there are some signs that that is softening if you look at the retail sales numbers that came out in the US as well. So that balance between inflation and growth for the Federal Reserve comes into focus a little bit more. But by and large, I think it's been reflected in terms of what we're seeing, movement up in bond yields and obviously the same reaction for the equity market to come down. That doesn't seem like too much of a concern for us, given that the market has rallied so strongly, especially on the equity side. A pullback in the market would be very normal in any given circumstance. But for us, the market's more reacting to the earnings outlook, the strength in that growth that's coming through, and the fact that we are seeing the economy handle those higher rates a bit better than expected. So I think the risk is really around the fixed income side, maybe seeing those bond yields move up a little bit and maybe not fall as fast as had been expected.
The problem that many have right now is that soft landing, mild or no recession is incredibly consensus viewpoint, arguably. What then could go wrong, Kerry, with that thesis?
Well, yeah, I mean, anytime something becomes strongly consensus, then that's obviously the challenge to it. We can think about everyone talking about a recession 12 months ago that didn't actually eventuate. So there's always a risk when everyone has the same view. You start to hear about capitulation of the markets or thinking about discounting too many risks out there. For us, it does seem like everything is pointing towards that soft landing of the economy. The biggest risk, and I think the thing that would be the most upsetting across equities and fixed income, would be for a re-acceleration in inflation. However, we don't see that coming through when we look at the data. We do see things slowing down. We do think, though, that the economy in the US is probably a bit more resilient to those interest rates than it has been in the past. And so, therefore, we're going to come into a policy cutting cycle that could be slightly more shallower. I mean, the Fed is still looking for 175 basis points in rate cuts out to 2025. Maybe that gets trimmed a little. Maybe that's pretty much in line with the long run average. I think the fact that we are still seeing those rate cuts come through over the next year and a half is what's going to be the most important factor for the market, rather than thinking about whether we get no rate cuts in June or we get that being pushed out to July.
All right, but Kerry, for what it's worth, what's the house view? Obviously, it's not 125 from the way you've been talking. Is it 3 by 25 for a total of 75? Or could it be even less?
I mean, yeah, we haven't really changed our view based on the most recent data, Martin. We're still looking for those 3 rate cuts this year, starting roughly in the middle of the year. I think that timing is being a little bit more subjective now, whether it's June or July. Obviously, June would fit in with the statement of economic projections, and then they'd probably do rate cuts when they release those forecasts over the rest of the year. I think most importantly, given that this is an election year in the US, the Federal Reserve will want to come out and signal that path very clearly ahead of time to say that they can't be sort of seen to influence the election or think about the political narrative. So I think the Federal Reserve will be very clear on that path, outlining that consistently, bringing down of rates and doing something that's very clear to the market to deviate from that.
Yeah, and when they do start moving, they can't leave it too late as well because of November. Understood. Kerry, stay right there. A lot more to talk to you about. We'll continue with Kerry Craig coming up in just a bit after this.
As countries increasingly engage in a race to net zero, what should governments prioritise now to help accelerate the evolution to an equitable, decarbonised future?
I don't think that there's a sort of a one-size-fits-all approach, right? It needs to be tailored to every economy and country's kind of particular circumstance.
Those that are setting ambitious sustainability targets and working across society, they're the ones that are going to win the race to net zero.
Squawk Box is breakfast with the most interesting people in the world.
The ultimate pre-market morning news show. Squawk Box. CNBC. Real money, real debate, real-time moves. Scott Wapner, live from the New York Stock Exchange. Halftime report. CNBC.
Whether you're a couple of steps ahead or not, I think is irrelevant. It is a movement that will transform countries over the next decades.
On the next Managing Asia, the people behind Ayala, steering the EV revolution in the Philippines.
When we do something, we want it to scale. So our vision for EVs is it becomes a real component of the Philippine transport sector.
Catch more of my exclusive look inside Ayala Corporation only on Managing Asia.
Monday on Squawk. Welcome back. We are still with Kerry Craig, JP Morgan Asset Management, with us live. And let's pivot to where you are, Kerry, and talk about the RBA. I think consensus seems to be that they're going to hold at 4.35, but they're going to wait until probably Q4 to really get aggressive with potentially 2 cuts. What's the house view?
I think we probably won't see a rate cut until the early part of next year. I mean, there had been a case for building saying that they could squeeze a rate cut in by the end of this year. However, and the market pricing is still for rate cuts this year. However, the inflation data is still probably a little bit too strong for them. The unemployment rate, is going to come in this week. It will fall, but, largely taking out seasonality and the uplift last month. So it's still about 4%, which probably isn't soft enough. I think they'll wait, and they will value the optionality in waiting to see that inflation number come down, to see the effects of some of the tax changes that are going to come in mid-year, to see that softness in the labour market really play through and have greater clarity around that inflation or disinflationary impulse being very clear compared to their forecast before they do start to cut rates. So I think the messaging you get from the RBA today will be very similar to last month, that we think they're done with the rate hiking cycle. They could hike again if they really needed to, but more and large, they're on hold until they see that data soften out. I think, again, now that we get a press conference, you'll probably get more of that in the press conference as well.
How are you approaching China, Kerry?
The Chinese market is just lacking of confidence at the moment. If you look at the data, it's still not really stacking up. Obviously, you were talking earlier about the credit data and the loan data. It does seem like the only people interested in debt at the moment are Chinese officials in terms of they're stimulating the economy and the credit growth is coming through. You're certainly not seeing it on the private investment side. And you're not seeing spenders really go out and spend in a big way. Households still seem relatively conscious of their balance sheet and are willing to go out and spend, but not on those big ticket items, which really indicate their strong confidence in the market. Now, some of that has to do with the unemployment rate and the prospects in the housing market. So until you do start to see that unemployment rate start to fall and the property market and house prices stabilise or start to improve, it's very difficult to see the economy really gaining a lot of traction from here. And unfortunately, we don't think the government's going to come in with a big blockbuster stimulus package from here, given we've already had the MPC come through.
Kerry, despite the market multiple in India, rising India, that narrative has arguably become a little bit consensus as well. We've seen a lot of momentum, a lot of funds flowing into India. Is it time to just maybe take a breather and step back now that we know the dates of the election?
Well, I think the Indian outlook has been one that's been exceptionally strong. Obviously, you've seen a lot of money flow there in terms of the economic performance, some of the policy certainty that have come through, and also some of the shift away from China in terms of thinking about either the supply chain or the investment opportunities that were produced there. And because of that, the market has started to rise in terms of that valuation. I think the equity market now is trading close to 23 or 24 times in a forward 1 year earnings multiple. But that's the rub. If you want to invest in an emerging world and want to invest in India for its growth potential, it is thinking about taking that multi-year horizon when it comes to the earnings outlook. So if you look at the price compared to the normalized earnings for the economy or normalized earnings for the equity market, it doesn't look as highly valued, and there's probably more opportunity there. But I think if you factor that in with some of the policy changes we're seeing come through, the supply side reform, there's a lot more growth to come through in India, and therefore I think the equity market continue to perform quite strongly on the back of that.
Kerry, quickly, Japan, BOJ, are they going to move early? That is tomorrow.
We still think it's April for that move away from negative interest rate policy, but tomorrow you're going to hear a lot more around the use of the balance sheet, ending of ETF purchases, probably the ending of the YCC, but not abandoning the availability or the flexibility to buy bonds should they need to.
Kerry, excellent as always. We'll leave it there, sir. Thank you very much indeed for those insights. Kerry Craig there, JP Morgan Asset Management. We're back in 2.
Today's Forex Update is sponsored by Interactive Brokers. 150 markets, 33 countries, 26 currencies. Today's Forex Update was sponsored by Interactive Brokers. Trade worldwide from a single unified platform.
next. Sarah Eisen's full interview with Saudi Aramco CEO Amin Nasser.
You pulled off the biggest IPO in history. There are questions about whether you would consider a secondary listing. Do you think that we are looking at peak oil globally?
In the US, per capita is 22 barrels. In Europe, it's 9 barrels. In Asia, it's about 22 barrels. So there is room to grow.
Amin Nasser, a CNBC Leader Special.
We respect our competition, whether it's in North America, whether it's in Europe, whether it's in China. We are also a large global player today. And as I mentioned to you, exports is only 10% of our business today. And we're not saying that the export revenue would go up to 20% or 25%. So export revenues would inch up. And as far as we are concerned, the markets that we are present in today, whether it's India or whether it's certain parts of Southeast Asia, which there's not that much presence of the companies in Europe or in North America in these regions.
Money on Squawk, welcome back. Taiwan PC and laptop maker ASUS out with earnings Friday. Emily Tan, how do the numbers look?
We are going to be watching reaction, Martin, in the share price today with ASUS coming out with its full-year report card. We got profits of $502 million. That's an increase of 8% year over year, translating to 21.44 Taiwan EPS. Revenues were down almost 10% to $14.1 billion. The company really has its focus on AI, that being the growth driver in the coming year, the coming half year and the years ahead. The leadership will be in AI devices and solutions, and the growth cycle, they say, will start in the second half. This is all, of course, contingent on Microsoft and their upcoming operating system, which will allow for AI artificial intelligence. So this growth cycle is expected to last the next couple of years. Now, I got a chance to sit down with the co-CEO of ASUS and I started by asking him about the outlook for the PC market. They're quarter-on-quarter sequentially, they're expecting a decline of about 10%, but for components, growth between 15 and 25%. This is what he had to say.
Actually, this year, the PC demand is not so strong. I think the mainly is because the economic status. So actually, from currently our sales order, our Q1, the PC shipment number were around 3 to 4 million. So that's a little bit flat. But because from the IDC, I think the whole year, the PC TAM growth were around low single digit, maybe 2 to 3%. So the growth rate for the whole year PC shipment number is almost flat compared to the 23. So that's the Q1 status for the PC.
The global PC market finally returned to growth in the final quarter of last year after 8 straight quarters of decline. That's according to Gartner. They have a growth prospect of 3.5% for overall PC shipments this year. How big of a boost are you expecting from hardware-enabled AI PCs, and when do you expect that to kick in?
Actually, I think this year the AI is a very hot topic. So I think everybody wants the PC have the AI capability. But because the AI PC combines 3 factors. First is the hardware. The second is the OS. The third is the application. So because Microsoft, they will release the new OS to support the AI function in the second half. So the AI PC shipment will start from the second half of this year. So from our point of view, the AI PC share in this year were only around low single digit. So, but ASUS have the strategy. We would like to be the first and the leading position for AI PC. So we will co-work with those vendors to provide our solution first to the market.
Keeping ahead of technological advancement and geopolitics are all in a day's work for a CEO. And Donald Trump is talking about a blanket 10% tariff on all U.S. imports. What would this mean for business, and how are you preparing if he were to be back in the White House?
This is a very good question. Actually, I have quite confident with ASUS' ability to handle this environmental change. And I would like to say USA is a very important market to ASUS. We start our US operation in the 1990s. So the past 30 years, we set up the sales office and the customer service and even the production line, just as I mentioned in last year. So we would like to provide our best service to our customer in the US, and we would like to keep developing our business in the US. But about a tariff, I think, fortunately, this is not the first time we have the experience. So we will co-work with our manufacturer service, EMS partner, to move our production line to some other place so we can avoid this high tariff issue.
Speaking of production, so they're making facilities in Silicon Valley. That is for servers. I asked him about the Indian market because that is a largely growing market there, and how they're growing their manufacturing. He says he would only say that they can provide local manufacturing in India. The growth there, of course, expected to outpace the global growth in terms of the PC market. As far as China Plus One is concerned, he says they like to do business with every country and every customer, so they will follow with each country's request and their customer's request. Looking ahead, back to the AI growth plans, they said server revenue is expected to grow 50% for 2023, and this is going to be, they're going to be forecasting and exceeding this growth rate for 2024. They project a 5-fold surge in growth in its server business for the 5 years to 2027. ASUS Tech has a 6.5% global market share in PCs, and we're going to be watching market reaction today. ASUS Tech shares start at $429 per piece, getting online in the 9 o'clock hour. We're going for a short break here on Squawk Box. We'll be back right after this.
A world of rising complexity demands fluency to achieve growth. At SGX Group, we offer multiple avenues of growth in Asia as we expand our global network. As one trusted ecosystem, we are fluent in the language of growth. And however you define growth, we will help you reach for it. Be first on world markets, first to the global business conversation. Get a jump on the investing day every day with Frank Holland. Success starts early. Worldwide Exchange, CNBC.
The biggest names in business.
It was a really good quarter
when it matters most.
This growth was driven by transactions.
Before they talk to Wall Street, they talk to John Fort and Morgan Brannan. Closing Bell Overtime, weekdays on CNBC.
We're moving from the autopilot era of AI to co-pilot era of AI.
We are just at the dawn of the robotics age.
The more experience you give it, the more capability this AI model can achieve.
Hopefully improves productivity, and it doesn't displace more jobs than it creates.
How to maintain our humanity if we live more and more digital lives.
The new era of tech on CNBC.
What was my ambition when I was starting out? Survival. Grew up pretty rough, and we ended up homeless when I was in high school. It really motivated me to have a career in which I wanted to have an impact on people's lives. Art is bold creativity, bringing your visions to life. My dream for Kickstarter is that anybody with an idea can bring it into reality. If I can do it, I want to show other people that they can do it too. I just want to bust the door wide open for everybody that looks like me.
CNBC. Live ambitiously.
Time check, 7:30 a.m. Hong Kong, Singapore time, less than 30 minutes away from the open up in Tokyo, where futures are handicapping what looks to be a positive start. Dollar yen, we are at 148.97 right now. Seoul, South Korean market opens up same time as Tokyo. Sherry Kang, how are we shaping up today?
Yeah, so let's go back to Friday's session. Some meaningful consolidation there. A lot of technicals are being triggered as well. And that's why we see this kind of price action as of the end of Friday. South Korea ETF closing lower by more than 2%. All that really had to do with Samsung CNT triggered declines, I must have to say, because the overarching theme for the market for, most of 2024 in South Korea has been this thing called value up. Let's reduce the so-called Korea discount. That was the campaign coming from the government. But on Friday, we sort of got this rude awakening that it may not be such an easy process to reform, achieve corporate reform, because not all activist funds' demands will be welcomed and, of course, accepted. We saw that at Samsung CNT AGM on Friday, and that stock declined 10% on Friday alone as the NPC, the National Pension Service, eventually sided with the management and other shareholders, and rather than the activist funds who called for bigger dividend payouts and so on. Now, we're going to have 371 listed companies holding their AGMs this week. Samsung Electronics this Wednesday, Hyundai Motor on Thursday. So definitely a major market narrative in South Korea. In terms of the currency board, we've got this major comeback for the dollar. If you look at the 30-day chart, if you have that available, that chart would clearly show that big comeback for the dollar, obviously ahead of the FOMC meeting later this week. That would be an interesting chart to look at. And also, we've got some ballistic missile activities potentially from North Korea this morning. Interesting timing, isn't it? And I tend to say this a lot when it comes to North Korea's missiles, because we've got the U.S. Secretary of State, Antony Blinken, of course, arriving in South Korea just yesterday, attending this meeting called the Summit of Democracy that is kicking off today. So definitely geopolitics also under our radar this week. Shri, it's back to you.
Absolutely, Sherry. Pyongyang making a point. All eyes on NVIDIA today as the company's GPU Technology Conference, or GTC, begins. This is an annual tech conference targeted at developers, engineers, researchers, with CEO Jensen Huang set to take to the stage late on Monday for a 2-hour keynote address. Jensen Huang is expected to outline the company's latest artificial intelligence products and other new technological advancements in the pipeline. And we will see if that conference triggers a rush of new orders for NVIDIA. That will likely be a big boost to its own suppliers, including the world's biggest chip maker, TSMC. Right, I'm delighted to say Simon Wu is with us now, APAC Technology Research Coordinator at BOA Securities. He's joining us from Taipei, from the sidelines of the BOA 2024 Asia-Pacific TMT Conference. Simon, welcome. First of all, what can we hear about innovation, the speed of next-generation chips that are in development that will power this AI boom?
Yes, AI is so important, not only for the U.S., but when you look at the Asian tech companies, lots of value creations you can see with the semiconductor chip makers, and also the lots of the hardware tech companies are ready to deliver value creation for the shareholders. We believe this thing is not just for 2024. We think that this thing will last even more than the 1 or 2 years, multiple year growth we can expect. Actually, our 27th anniversary APEC TMT Tech Conference here in Taiwan is one of the most important events for the investors. Number of participants, more than 500, with corporate management, investors, industry experts across the globe. We are ready to discuss AI things.
Simon, two questions. Has the inventory overhang now been worked out of the system? And how big a challenge is the geopolitics, and how are supply chains therefore holding up?
Number one, lots of the AI-related companies already reported great results. It's already evident. Meanwhile, people are talking about the geopolitical risk, some China-U.S. concerns. However, the fact is, lots of the Asian tech companies already reported good results. And also through our 27th anniversary conference, we think the investors can learn how the Asian companies can be more and more innovative with AI. Seriously, without AI business model, we wonder how the companies can deliver double-digit growth this year, next year. When you look at the previous disruptive tech, such as IoT, AR, VR, the duration of the peak cycle just 1 or 2 years. But if the AI offers multiple year growth, that means great thing for the Asia tech companies. Asia tech companies are continuously working with the U.S. companies. So great ecosystem between Asia and the U.S. that already taking place, and that it offers multiple year growth, we think.
Simon, what are delegates at the TMT conference saying about the fundamental outlook, about business conditions in an environment where China's economy is struggling and Apple are expected to report lower iPhone sales?
Maybe two different stages. If the U.S. feminist companies continuously design the new GPU for the data center, for the AI training or AI ecosystem, Asian companies are ready to fabricate lots of chips, not only the logic chip, but look at the Korea. We have lots of the memory chips, and also the Japan, lots of new equipment, materials, and the Taiwanese OEM companies are ready to deliver more meaningful AI products. So without concerning the geopolitical risk, the very well established ecosystem really working well. So I know some investors saying it's kind of the peak of the AI, but if the Asian manufacturing companies or chip makers, component vendors, tech companies can deliver double-digit growth, no need to worry about the peak of the AI cycle, we think.
Simon Martin here. Good to see you. This whole AI boom that we're in the middle of it, I think it's only just the beginning. How does it compare to previous times when we've had in the introduction of disruptive tech? I'm thinking here of, say, the PC itself, smartphones, the cloud, EVs, etc. I mean, is this by orders of magnitude more important and bigger than any of those?
Yeah. So the beauty of the AI started with the B2B market, not the B2C or retail market. Retail market it can be affected by the macro risk. But the B2B market is based on the long-term business plan. So far, all the cloud data center investment driven by the U.S. But who knows? After the U.S., emerging countries can also show the very strong growth investment in the data center and the cloud. That's not the end of the story. Look at the new smartphone these days. We can say on-device AI. The individual smartphone can have the AI function, or individual electric vehicle can have an AI function. It's not one particular segment-driven thing. AI covers entire B2B, B2C market, and also it requires a very expensive value-added component, semiconductor chips. Chips coming from Asia. Chip design coming from the U.S. What do you think? Very great ecosystem.
Simon, what are you hearing about how these chip developers are pricing the product if competition, as I'm sure is intense and intensifying further?
Chip price is a function of the, as you know, supply and demand. Demand is getting stronger, and but the chip production increase is highly dependent on the very expensive EUV tools or infrastructure. Even AI is needed to manage the very expensive $1 billion fabs. So as long as the demand remains high, strong, the chip makers can relax, and then they don't have to cut the price. And the good news for the chip makers, particularly for the Asia, foundry coming from mainly Taiwan. Meanwhile, memory chip coming from the U.S., Korea, sorry. So Taiwan foundry, Korea memory chip is a great combo, but we don't see any significant intensive competition among the countries, among the companies for the AI semiconductor chip. Chip industry seems to be very, very well established with a very disciplined supply versus a strong demand. So no need to worry too much about the chip price correction, we think.
Okay, Simon, listen, fantastic talking to you. Appreciate the time. Thank you. Keep safe. We'll do it again very soon. Simon Wu there from BofA Securities joining us live. We're going to go for a quick break on Squawk as we tail out. Take a look at the big movers down in Australia. About 40 minutes into a fresh week of trade there. We are back in 2.
Interactive Brokers pays up to 4.83% on instantly available U.S. dollars in your brokerage account. How much interest can your bank or broker pay? Interactive Brokers' conservative and prudent risk management uniquely positions us to pay up to 4.83% on uninvested, instantly available U.S. dollars in your brokerage account. The best informed investors choose Interactive Brokers.
Marking 15 years as UN Secretary-General's Special Advocate for Inclusive Finance for Development.
We've actually seen financial inclusion progress tremendously. Digitization has been a big part of this, and for that to be sustainable, safe, and really inclusive, and we need to be out there also with a product that is also affordable, because otherwise they will not be able to actually access it.
Her Majesty Queen Maxima of the Netherlands on the next Equity and Opportunity.
What do these big brands, including Samsung, Hyundai, and LG, have in common? They're all chaebols, which are large South Korean conglomerates that are usually run by one single family. There are more than 80 chaebols in South Korea in 2023. And the revenue of the 10 biggest accounted for almost 60% of South Korea's GDP in 2021.
Korean chaebol became the de facto political power and the gatekeeper of our society.
The history, origin of our Korean conglomerate started with the government management.
Throughout 60, 70 years, during this development process, chaebol actually helped a lot. They have invested a lot in technological advancement and created many talented human resources.
Despite this remarkable growth, there are calls for change and innovation to propel South Korea forward.
Welcome back. It's a Monday here on Squawk Asia. Let's get a look at how treasuries are shaping up so far. We've got the benchmark 10 at 4, closing in. Now we've jumped just above 431. Rate sensitive 2s at 473.39. Of course, one of the key risk events for markets this week is the Fed. Kicks off tomorrow stateside. We'll be waiting to see if there's any indication in the Fed's so-called dot plot on whether it'll scale back its expectations for 3 rate cuts this year. This is as the latest set of inflation data out last week came in hotter than expected. All right, joining us to talk more about the investment opportunities in real assets amid a lower interest rate environment, or rather potentially higher inflation environment, is Michelle Butler, portfolio specialist at investment company, a management company, Cohen and Steers. She joins Sri and I live around the desk here at the SGX. Michelle, great to see you. Welcome, and appreciate your time today. So let's lay out sort of the macro backdrop for why you think real assets are the place to be. And it's simply because, look, there's probably zero chance or very minimal chance we're going to go back to the old days of, say, 2% inflation. If we're lucky, we're going to normalize at about 3. While it doesn't sound like much, from 2 to 3, that's a 50% jump. That is inflation.
That's right. Thank you for having me this morning.
So we do believe we have entered a new macroeconomic regime, one that can best be characterized as a period of broadly slowing growth and elevated inflationary risks. That's very different than the market environment we came from in the preceding 10-year disinflationary regime, which was characterized by low interest rates, low inflation, globalization or vast trade, commodity oversupply, which held back and restrained commodity prices, and relatively subdued geopolitical risks. That's clearly not the world that we're living in today. We believe there are secular forces in play that remain present in the market and underneath the surface, so to speak, such as commodity discipline that we've seen on the side of producers that has restrained inventories, restrained production and output. Deglobalization.
So which is undersupplied is the point you're trying to make, right, in terms of commodities.
Correct. We have moved into an undersupplied market, and that's really the characteristic of this new environment. Other factors that are inflationary catalysts that remain: very tight labor markets, definitely geopolitical risks, fiscal uncertainty, so various factors that really mark this new regime that we've transitioned to. And as you said, that we believe we'll be living in an environment of higher inflation, roughly averaging about 3% over the next decade.
All right, and real hard assets, including real estate, infrastructure, et cetera, commodity-related assets, equities as well, would provide alpha, uncorrelated returns, is your point.
That's correct.
Yeah.
So we believe in this market environment, real assets offer the benefits to provide diversification, increased diversification within a portfolio, and also given their sensitivities to inflation, they provide a catalyst, a benefit to provide inflation hedging capabilities when inflation is rising and surprising to the upside. And those are really the key benefits. When we're talking about real assets, we typically speak of the core four. So that's global real estate, global listed infrastructure, commodities, and natural resource equities. They're all global, they're all listed, they're all well diversified and liquid.
There's a lot of interest in REITs over in Japan, and that really speaks to the entire corporate governance story and the Japanese Renaissance. Is that where you want to be, Michelle? And also, if I can also ask you about the commodity side, how would you express that? Is it agricultural acreage, farmland? Do you go that far, or is it the agribusiness companies that you want to buy?
Sure. Well, within the real estate, with the global real estate portion of the real assets bucket, real assets category, within Asia Pac, we prefer Australia right now, specifically industrials, where we're seeing very strong positive fundamentals for properties. Within commodities, we're accessing that typically via the derivatives market, futures where we can. And we have a preference for base metals today, or industrial metals, specifically copper, which is a market due to supply disruptions that has very quickly moved the 2024 balance into deficit at a time when we already have, as I mentioned, very low inventories across the space.
Is China's slowdown a challenge or an opportunity to buy at the relative lows?
Sure. So I would say it's been a challenge in that it has been a negative sentiment driver on commodities, certainly in 2023. But the macroeconomic environment and that sentiment is beginning to shift, and we've seen that in recent weeks from the meetings that have come out of China. So we are more optimistic, in particular base metals that are in particular tied to China. We also favor oil markets, so crude oil markets, where we are a bit underweight the agriculture space, in particular grains that are broadly oversupplied due to weather and successful and robust crops that we've seen around the globe.
Isn't oil for really longer-term investors a sunset industry? When you look at the transition towards net zero emissions and the increasing investments that have gone into green energy, we were talking about green graphite earlier on in the programme. How are you approaching that side of the narrative?
More than net zero, look, it's a destination, right? But on the way there, and this is probably one of the reasons you like your overweight integrated oil companies, on the way there, right, they're going to be trying to keep investors happy, right? Throwing off divs and buybacks left and right.
Right. So in the energy producer side, that would be within our natural resource equity portion of the portfolio within that asset class. We're overweight, as you mentioned, integrated companies. We're underweight the shale E&Ps because of higher CapEx. So we're differentiating beneath the space. But we believe this really is a world, an energy addition story, as opposed to an energy replacement story. As you said, it takes time, right? It takes the energy transition has been in progress for several decades already, and that will continue for several decades. And we've had many examples around the globe, a lot of them climate-related, where we have realized that we cannot fast forward and get to a 100% net zero that quickly. We are getting there, and there are opportunities within this portfolio where we have access to both traditional as well as renewables. Much of the renewable exposure comes within our infrastructure portfolio.
Michelle, we're just out of time. It's a fascinating conversation. I would have liked to touch on some of the other markets out here, but perhaps at a later stage, another opportunity.
Great.
Michelle Butler there, off Cohen and Steers. Thank you very much.
Thank you.
Coming up on the programme, Airbnb is overhauling its security camera policy. The home rental company banning indoor cameras in what it says is a move to prioritise users' privacy. Details on that move and what it means for you as a potential guest. Right after the break.
I manage O3C Montpellier, the control tower for all the renewable assets we have in France and the other six territories. We are the first in line to spot when something happens, like a stop of production.
Oui, allô? Oui, bonjour, Frédéric. J'appelle pour une centrale.
Then we sent a local team to restart it manually. This tiny incremental change could make a big difference.
Whether you're a couple of steps ahead or not, I think is irrelevant. It is a movement that will transform countries over the next decades.
On the next Managing Asia, the people behind Ayala, steering the EV revolution in the Philippines.
When we do something, we want it to scale. So our vision for EVs is it becomes a real component of the Philippine transport sector.
Catch more of my exclusive look inside Ayala Corporation only on Managing Asia.
We're not in this for the short term.
There is no place in the world where we get the kind of access to so many amazing interviews.
The future of the tech industry, AI clearly a huge part of that journey.
How big a game changer is this?
Let's go.
Welcome back. Monday here on Squawk Asia. Last week, Airbnb announcing a big change in policy, saying security cameras will no longer be allowed inside their home rental. CNBC's travel editor, Monica Petrelli, has more on this story. Good morning.
Yeah, good morning, Marty. Yeah, so really, travelers having one of two main reactions to this announcement. The first group says, great, fantastic, happy to hear it. Perhaps a little bit late, but better late than never. The second group saying, wait, this has been allowed all this time? And yes, in fact, cameras have been allowed inside Airbnbs if they were in so-called common areas. This is like hallways or living rooms. Also, if it was disclosed on the listing before you book online, and if the cameras were obvious, you could see them up there on the wall. Those days coming to an end. Starting April 30th, all indoor cameras will be banned in Airbnb properties. This is worldwide. The company is saying they're doing this to prioritize traveler privacy, but also just to make their policy easier. Now Airbnb's policy more in line with what we're seeing from Booking.com and Vrbo. Vrbo, though, interestingly, having a major exception to their rule, and it says this: smart devices that may not be activated remotely are allowed as long as you've been informed of their presence and given the option to deactivate them. Now, I wasn't wasn't quite sure what that meant. So I reached out to the company over the weekend, and they wrote back to me saying, look, this is really these so-called smart devices that make a home, smart. These are things that control lights, locks, curtains even, music. Think about your Amazon Alexa device or Google Nest, saying that homes can have these devices, but some of them do have cameras. You want to watch out for the ones that have the screens. The travelers, again, must be told about them. Now, what is allowed? Outdoor cameras still widely available and allowed. However, Verbo saying if you're in an area where people might expect to have some privacy, think like a sauna or a pool, you must tell travelers about that. And Airbnb saying we will be issuing more comprehensive rules by the time that this new policy goes into effect next month.
To be fair, you can see it from the host's point of view as well. They don't want people trashing their homes. They want to be able to make sure that does not happen. But is this going to be enough to assuage the concerns of Airbnb users?
Which is privacy at the end of the day, right?
Privacy, yes.
Yeah.
Well, travelers really widely applauding this measure. However, the people that are following the rules, say, and disclosing the cameras and having them obviously in the house, this isn't really what people are worried about these days. The ones that are really causing people to have a bit of a crisis when they rent houses are the so-called hidden cameras. These are the ones that people are finding behind mirrors. You look at social media, they have these very dramatic videos where people will pull out hidden cameras behind wall sockets. We did our own investigation back in January. We hid 27. Our digital video editor finding about 17 of the 27, and that was using those devices to find the cameras. So this does not deal with that topic at all. I still think this is going to be the main thing going forward. So Airbnb will have to deal with this issue of the bad actors.
So much of this is trust as well, isn't it? And that's why hosts and users are reviewed and rated. And that's why I always just simply go with a well-rated host who you would not expect to put cameras around everywhere.
Even if it's a rental, you still want to feel safe, right?
Yeah. And as a user, you just behave yourself and treat it like your own home, quite literally. Monica, great story. Thank you very much indeed for that. Right, let's bring it back to the markets, and do stay with us for the market opens in Tokyo and Seoul. We are back in 2 minutes.
Today's Forex Update is sponsored by Interactive Brokers. 150 markets, 33 countries, 26 currencies. Today's Forex Update was sponsored by Interactive Brokers. Trade worldwide from a single unified platform.
Global markets, up to the minute, front page news. Wake up to Frank Holland and Worldwide Exchange. CNBC. Real money, real debate, real-time moves. Scott Wapner, live from the New York Stock Exchange. Halftime report. CNBC.
Every new vehicle we put out, we're improving fuel economy and emissions.
We need a balanced and a fair energy transition for everyone.
The total value chain of battery will be very important.
Improve our operational efficiencies and reduce the consumption of natural resources.
Environmental sustainability is a must, and energy security is another pillar.
Renewable energy is cheaper than electricity made from fossil energy in 90% of the world already today.
Fostering sustainability on CNBC.
Being the first woman engineer at Google, I got asked all the time, what's it like to be a woman in tech? And I realized that I didn't feel like a woman at Google. I felt like a geek at Google. It was the passion around what we were doing that really, for me, neutralized the notion of gender, which is why I like to say passion is a gender-neutralizing force. To me, ambition is being undaunted by the impossible. I've been really lucky to work at two companies, Google and Yahoo, that really fundamentally changed the world.
It is the last hour of power, 8 a.m. in Singapore, 9 a.m. in Turkey, 11 a.m. in Sydney. I'm Sri Jagaraja alongside Martin Sung. Japan and South Korea just joining the trading day. Your headlines at this hour.
Let's hit it. Asian markets working with a weak lead from Wall Street Friday. The Fed squarely in focus this week. No change expected at the conclusion of Wednesday's conclusion of the meeting on Wednesday, when investors are going to be watching the so-called dot plots to see if they scale back projections for 3 interest rate cuts this year.
And there is a pivotal meeting taking place here in Asia as well. The Bank of Japan kicks off its 2-day meeting today, with markets watching for a major policy shift after Japan's biggest companies agreed to the largest pay hike in more than 30 years.
And we're bracing for monthly economic activity indicators out of China this morning. Industrial output and retail trade seen falling from the month before as calls continue to grow for more government stimulus to get the economy back on its feet.
And Taiwanese PC vendor ASUS Tech sees a server revenue growth this year to exceed last year's annual growth rate of 50%. It also expects AI PCs from its ASUS brand to be essential to its growth from the second half.
ASUS have the strategy. We would like to be the first and the leading position for AI PC. So we will co-work with those vendors to provide our solution first to the market.
Interesting market action on the Nikkei 225 at the get-go. It's making a run, it seems, on the 40,000 level once again. Not quite getting there at the early stages. Bear in mind, we are just 2 minutes into the opening day. We are seeing something of a resurgent yen. It may or may not have something to do with the BOJ and the fact that they could, emphasis on could, announce that they are exiting ultra loose policy. You've got the dollar-yen rate at 148.99. However, the Nikkei 225 putting on about almost 300 points. As we said, Bank of Japan's 2-day policy meeting kicks off today. Could see a policy shift at the BOJ as early as tomorrow as it looks to exit its decade-long ultra-easy monetary policy. This after the annual Shunto wage negotiations last week resulted in a massive bump up in pay amongst unionised workers.
All right, so not just Tokyo, we've got South Korea just coming online. About 3 minutes into a fresh week of trade. Sherry Kang, what's going on?
Yeah, so we got some recovery from, of course, Friday's sell down. I mean, we did see the Kospi falling 2% on Friday alone. Foreign investors in net selling 1 trillion Korean won worth of South Korean equities that day alone. And, of course, declining for the first time in 4 sessions. Small gains coming through for the Kospi as well as the Kosdaq. And we've got the Korean won sitting at 13.29. Interesting to look at the bond as well as the currency space, obviously, this week, given the central bank action, FOMC, as well as that nail-biting BOJ as well. Let's go through some of the top heavyweights, and we do see some moderate gains coming through for the chip makers. It will be very interesting to be watch this space as well ahead of course, NVIDIA's big event, a conference for developers, GTC. And we do see reports suggesting Samsung as well as SK Hynix sending their speakers to the event to talk about HBM as well as AI-related computing demands as well. We've got Samsung Electronics sitting higher by 0.5%, and batteries are coming back a little bit. LG Energy Solution also getting bid by 0.8% right out of the market open. Now, looking at South Korea's shipping space really quickly, because we do see this SCFI, so that is the short for Shanghai Containerized Freight Index. Basically, the shipping cost, the freight cost. That's been declining for a fifth week in a row. And in fact, just last week, it's declined 6% week to week here. And that means something, that perhaps this supply chain issue, this increased shipping cost is coming down a little bit. And we do see HMM, in fact, higher by 1.3%, because if the shipping cost surges, then that's actually bad for their business altogether at some point. And we did see that kind of commentary coming from some of the shipping cost management as well in recent weeks as well. And of course, speaking of HMM, this is a company that is largely owned by the KDB, the state-run bank here, Korea Development Bank, and they were supposed to be sold off to a new owner, but that of course, journey didn't really end in the final stage here because of course, a lack of funding and so on. And that's the reason why we see this headline coming through. The government is injecting 2 trillion Korean won, or $1.5 billion US into this state-run Korea Development Bank here. They do have the funding needs in order to basically provide liquidity to troubled companies in case of emergency through restructuring. And they need to provide for strategic national development projects as well. I think that's the reason why they felt the need to do this at this point in time. And we've got actually shipping stocks sitting lower month to date. HMM down more than 11% this month alone. Shri, it's back to you.
Sherry, excellent report. Thank you very much for that. Now, we are on Data Watch in China. We're set to get the latest monthly economic numbers in just a couple of hours' time. Samvadas has a preview.
Yep, 10 o'clock Singapore, Hong Kong time, just about half an hour after the market open. Shri, we'll be getting those economic activity indicators for the month of February. Let me run you through the expectations, because the market is expecting the retail sales and the industrial output to come off a bit from the January numbers. But, of course, we do need to keep in mind there is some distortion caused around the shifting date of the Chinese New Year. There's also some base effects playing into this, given that we did have that post-pandemic rebound at the start of last year. So keep that in mind. 5% on the industrial output from 6.8 in January, 5.2% on retail sales from 7.4% the previous month. And then we've got 3.2% on the fixed asset investment from 3% previously. We're also keeping an eye out on the jobless rate today, because the government is, of course, pledging to create 12 million new urban jobs this year. They are very much concentrating and turning their attention to the consumer right now. So that is sitting at 5.1% at the moment. We'll see what those numbers certainly tell us today. The markets will also get a chance to react this morning to the new loan data that was out on Friday. The bank lending actually falling more than expected. The loan growth coming in at a record low. So we did see those new loans at 1.45 trillion yuan. That was off the record high we saw in January. But of course, they do tend to front load some of this these loans. Household, which of course is mostly mortgages and corporate loans, were down. So contracted M2 money supply 8.7%, lower than forecast, and also was that TSF. The folks over at ING are certainly suggesting that it is very helpful to look at the overall trend, not to get too bogged down in the month-to-month numbers, because, of course, of some of that distortion caused by the pandemic and also the Lunar New Year holiday. In terms of the policy response, of course, we had no change to the MLF rate on Friday. The LPR will be set this week. The expectation is that no change there. And just very quickly, we're going to be keeping an eye on Contemporary Amperex today. Of course, the big battery maker over in China. Quarterly profit, that was the first drop we've seen since 2022. However, Mahi, what we have seen is that in the first 2 months of the year, they have managed to regain their market share in terms of the batteries over in China, up over 50%. And that, in comparison to their competitors, BYD and CALB, they're only capturing about a quarter of that market. So they're still going strong in China, despite the tough competition and the slowing demand.
All right, Contemporary Amperex.
Yep.
CATL, just don't call it cattle. Thank you, Sam Bonus there. All right, getting data out of Singapore this morning as well. This is non-oil domestic exports due to drop at the bottom of the hour. We'll have that data for you as soon as it breaks, hot and fresh, 8:30 a.m. Hong Kong, Singapore time. Ahead of that, here's how dollar Sing is trading. We're at 133.81. We're back in 2.
As countries increasingly engage in a race to net zero, What should governments prioritise now to help accelerate the evolution to an equitable, decarbonised future?
I don't think that there's a sort of a one-size-fits-all approach, right? It needs to be tailored to every economy and country's kind of particular circumstance.
Those that are setting ambitious sustainability targets and working across society, they're the ones that are going to win the race to net zero.
From interest rate paths to economic slowdowns, geopolitics to local politics, 2024 is serving up a host of challenges for Asian businesses.
How are top leaders rethinking their plans and where are they putting their capital? Hear what the C-suite has to say about confronting challenges and adapting leadership in disruptive times.
Get it straight from the C-suite, Tuesdays on Squawk Box.
There's a huge hype around AI and what that cycle is going to bring.
Ultimately, it's the infrastructure players that continue to win out in this sort of AI boom we are seeing.
AI is quite possibly the defining technology of this decade, maybe even of our generation.
This is an AI revolution, and it's really, I think AI is everywhere, but it's not only happening in the data centers, it's happening on devices.
AI is really a critical part on our product development, but it also goes into our product.
Our goal is to democratize supercomputing for everyone and give access to them to improve business productivity, to get better insights from the data.
This is not about artificially, creating solutions. It's not about replacing people. It's about augmenting capabilities, competences, skills.
It is the year of AI, and it's ironic. This conference for almost a decade was all about 5G, and now this year it's the AI conference.
Monday morning here on Squawk. Welcome back. This hour shaping up markets-wise. Let's get a look. We've got Nikkei 225 about coming to 12 minutes into a fresh week of trade. Looking pretty strong, up 450 points or thereabouts, in excess of 1%. Korean market gains a bit more modest, but still a useful fifth of 1% in the money. Sydney trails, though, down to about a quarter of 1%. So it's going to be a big week for central banks. Of course, we've got the Fed, but here in Asia, we've got decisions due out from the Bank of Japan. Also, the Reserve Bank of Australia, RBA, tomorrow. RBA not expected to move from its current cash rate, 4.35. But the BOJ, though, well, they could be close to shifting away from its decade-long ultra-easy monetary policy, possibly as early as tomorrow. We shall see. And this is after Japan's Confederation of Trade Unions, Rengo, said the country's biggest companies have agreed to raise wages by 5.28% this year. BOJ officials have long said that the timing of a move away from negative rates would depend on the outcome of this year's annual wage negotiations, the spring talks, also known as Shunto. Then, of course, the big event is going to be the Fed. That decision due out on Wednesday, rather Thursday morning Asia side. No change expected, but we are going to be watching the dot plots, a summary of economic projections, to see just when and how much interest rates could be cut this year, whether or not they're going to move from the 3 cuts for 2024, which are currently being forecast. Let's bring in Andrew Tilton, Chief APAC Economist at Goldman Sachs. He joins us live up in from Hong Kong. Andrew, good to see you and appreciate your time. We'll get to the Fed and also the BOJ in just a little bit, but I want to talk China ahead of this usual trifecta of data due out. It's that time of month again. What are you expecting?
We're expecting about 5% retail sales growth, a little faster for industrial production. It's challenging always to interpret numbers around Chinese New Year, given the floating holiday. It's even challenging to interpret the year-over-year data because back in December, the last data point we got for these particular indicators, we were comparing against December 2022 during the COVID exit wave. So a lot of the numbers in December 2023, by comparison, look good. Now we're going to see some slowing to around 5%. We're a little above consensus on industrial output, a little below on retail sales, but broadly in line with the numbers you're showing on your screen.
All right, Andrew. I know you think that government in China is going to lean more on manufacturing and also on exports to help shore up the economy. Why so?
Well, we're in the context here is a multi-year housing downturn. We've seen these in other countries around the world over the years. Of course, the U.S. after 2008, Japan after 1990. We typically see slower growth, lower interest rates, more use of the central government balance sheet. So challenging domestic demand environment. And so to the extent that stronger export growth can provide one source of lift, we think Chinese policymakers would like to encourage that. The outlook for exports, we think, is a bit better this year. Global manufacturing activity appears to be picking up slightly. While there's certainly concern about more protectionism and trade barriers, that's probably a bigger risk for 2025 and beyond. So we do think that in case of China, we'll see a slightly stronger export growth pace this year.
All right, I think you're being diplomatic here, Andrew. Let's just say it and get it out here. I mean, November, the risk of Trump 2.0, the guy's talking about 60% or higher tariffs on China. We've been trying to figure out, look, is this just a candidate on the stump, or, you know, if and when he does win, is it going to be something that when he governs he's serious about? What do you think?
Well, certainly, China's looking at that as well. And we saw, if we look at the last Trump administration, we saw about a 20% average tariff on about a little more than half of the imports that the U.S. gets from China. So the numbers that he's mentioned in speeches recently would be a further significant increase on that if and when, if he's elected, and if in fact those are implemented to some degree. So clearly there is more tariff risk out there for Chinese exports, but it's not just the U.S. Europe is investigating Chinese EV imports and may initiate tariffs later this year. So that's, I think, another source of concern from the Chinese export perspective. The very strong competitiveness in electric vehicles in a number of the kind of green power sectors, among others, has raised concerns in some markets, notably the U.S. and Europe, but also some key emerging markets. And so you have seen an increase in tariff actions or other actions in third countries. That said, the overall environment, as I mentioned, is still pretty conducive to some pickup in exports this year. So we think it's going to be a challenging year for China to reach its 5% growth target. We don't think they'll quite get there. But one brighter spot should be still for 2024, the export outlook.
Andrew, is there any reason to believe that, given the pace of stimulus, that we could see a recovery in the second quarter, or is it coming much later in the year?
Well, the stimulus has been pretty graded, pretty measured so far. I think authorities still want to do what's necessary to limit the downside to housing, but without, using more policy stimulus than is required. They want to save the ammunition, if you will, for later if they face even bigger challenges, and also want to avoid side effects from stimulus, including, for example, increased financial risks or excessive debt growth. So although they are clearly in easing mode and we expect interest rates to go lower, we think they are going to continue to take a relatively moderate approach. So that leaves us with a still declining housing market, but likely a slower pace of decline than we've seen over the past couple of years. That's really the dynamic that we're expecting. Still a drag from housing, but not as big as before. A little bit more help from the export sector, and some of the tailwind that we had last year from the reopening post-COVID is fading. So we had a jump or rebound in services consumption. That's going to be much milder this year because the economy is largely back from a services activity perspective.
Andrew, thank you very much for those insights. We'll return to you later on in the programme. Andrew Tilton there from Goldman Sachs. We're back in 2 minutes.
Today's Most Active Stocks Update is sponsored by Interactive Brokers. 150 markets, 33 countries, 26 currencies. Today's Most Active Stocks Update was sponsored by Interactive Brokers. Trade worldwide from a single unified platform.
The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Let's get back to Andrew Tilton from Goldman Sachs. Andrew, how are you pricing the US dollar and bond yields, and how constructive or otherwise are they going to be for the backdrop in emerging Asia especially?
Well, we still think the Fed is likely to start easing in June, although we recently changed our call in the U.S. to have only 3 rate cuts this year from 4 previously. Inflation is coming down. It's been, at least on a year-over-year basis, it's been a little higher than anticipated, particularly in January. But we still think we're on track to get to the low 2% range in coming months. And we think that the Fed will look at this as an opportunity to begin bringing rates down from what are somewhat restrictive levels. So we're anticipating 3 cuts this year, and I think that will make it easier for Asian central banks broadly to begin their easing cycles. Some clearly look to be waiting for the Fed to begin easing to get the all clear, if you will.
Yeah, and I want to talk to you about Japan as well. But having said that, you're looking for 3. You've gone from 4 to 3. That just means you're in line with the dot plots. The problem is those dot plots could change depending on what happens this week. What do you reckon?
It could. It's certainly a possibility. We think we'll still have 3 cuts in the dot plot, but there is a possibility we see a move there. Of course, the dot plots are a forecast, not a promise. So even if they were to move, that's no guarantee of what the Fed will ultimately deliver. A lot of central banks in developed markets do appear to be setting up for easing here coming into the end of the second quarter. But the Fed could wait, but we think they're ready to do so. And we think the view on the committee is largely that rates are above neutral, and it's probably time, given the shifting balance of risk between inflation and unemployment, it's probably time to begin bringing them down from meaningfully above neutral levels.
Andrew, the starting pistol has been fired for India's general election. Is there anything inherent in terms of outcomes and scenarios that could impact your bullish India call?
Well, the growth pace in India has continued to be very strong. We've had very strong services exports, pretty strong domestic activity, growth looking to be in the high 6% range. The news flow has been quite positive. Of course, there's always a little pre-election uncertainty, but the general expectation is policy continuity beyond the election. A couple of things that we think are going to be mild headwinds for growth. One is we've seen some regulatory tightening on credit to avoid any kind of excess there and limit the risks of financial turmoil. Second, the government has indicated a desire to consolidate the fiscal accounts to reduce the fiscal deficit by about 1.5 percentage points over the next couple of years. That's pretty meaningful. Presumably that'll start after the election. The combination of a little credit tightening, a little fiscal tightening could lead to some deceleration in growth later in the year or into 2025. But India is still clearly going to be one of the bright spots for global growth in coming years.
All right, Andrew, I know you're an economist, but I'm sure you're watching the price action as well. And what I want to know is, and we were talking about this offline a couple of seconds ago, you're saying that over the weekend you changed your call on BOJ. You do think they are going to move early, which means tomorrow, right? If that's the case, what I'm trying to figure out is why is yen still knocking on about 149 or so? It doesn't make sense.
Well, most forecasters are anticipating that the BOJ will go in March or April. Over the last few days, I think that there's been a shift towards March, given the very strong wage negotiation, the early Shunto results, as well as multiple articles over the last few days in media implying that the BOJ will move. So those things, I think, have increased the probability on March. But there's still an expectation that the rise in rates over the coming year or two will be slow. I think Governor Ueda had indicated that in past comments. And so regardless of whether we get a move in March or it's a bit later, the expectation is that policy rates are going to remain quite low for some time to come. That, I think, is a key reason why you're seeing a relatively muted impact on dollar-yen.
Andrew, whether it's in Japan or in India or in Southeast Asia, are we in the early stages of discovering a productivity premium that is driven by AI? And if you could pinpoint where you think that opportunity is most compelling in this region and the implications for headline growth and inflation.
We are optimistic about the potential for productivity from AI, although if past productivity booms are any guide, this is going to take multiple years, maybe even couple of decades to fully play out. We're at the beginning of a significant investment boom to build out AI capacities, and ultimately the application of AI and the productivity benefits of AI in downstream industries are still mostly in the future. We did tweak our U.S. growth forecast a little higher in later years in this decade and into the 2030s on the expectation that there'll be a stronger pace of productivity growth. You asked about the potential beneficiaries in the region. In general, our models suggest that richer, more service-oriented economies would have slightly larger potential benefits. But the big message is there could be productivity benefits really in all countries to some degree, as you automate some of the lower value service-oriented tasks, hopefully allowing humans to focus more on middle to high value tasks and reduce some of the repetitive and automated tasks in various service industries. So we think that's a big potential benefit for the region, again, particularly for some of the higher income, more service-oriented economies.
Andrew, we'll wrap it up there. Thank you very much indeed. Andrew Tilton there, Goldman Sachs. We're back in 2 minutes.
I envision Ocean City to be a dream city. You can have all amenities within one reach.
The lifestyle here, I find nowhere in Vietnam. We bring the ocean inside the city. We bring the healing concept into the city.
You're a lifestyle creator.
Be first on world markets, first to the global business conversation. Get a jump on the investing day every day with Frank Holland. Success starts early. Worldwide Exchange, CNBC.
The Power Plays are here, breaking down the markets with updates and deep dives. What's moving now and what's next for your money? Sarah Eisen, Carl Quintanilla, Money Movers, weekdays, CNBC.
We're moving from the autopilot era of AI to co-pilot era of AI.
We are just at the dawn of the robotics age.
The more experience you give it, the more capability this AI model can achieve.
Hopefully improves productivity, and it doesn't displace more jobs than it creates.
How to maintain our humanity if we live more and more digital lives.
The new era of tech on CNBC.
Ambition is passion. It's enthusiasm directed towards a singular goal. When you make a movie or television show, you have to have an emotional destination for your audience. Curiosity to me is an engine. I want to tell stories that elevate us as human beings. I'm in the feelings business. My best movies, people are crying. I want to see people moved to tears through triumph.
CNBC. Live ambitiously.
Good morning. Singapore trade data fresh off the presses, and a February fumble, it seems, for Singapore non-oil domestic exports, and proving that the trade recovery in Singapore perhaps a bit more uneven, a bit shakier than some were actually expecting. Now, economists heard by Reuters were expecting that non-oil domestic exports would have grown by about 4.7% on a year-on-year basis, but again, a flaccid February, down 0.1% year-on-year actually in terms of non-oil domestic exports from the city-state. On a sequential basis, they actually declined by about 4.9% month to month, actually. And again, non-electronics exports this time around, which was one of the big drivers for January's outperformance, actually coming down quite significantly and also leading that drag. Looking for a silver lining here, we're seeing electronics products actually growing by 5.2%. We're talking about integrated circuits growing by 15.9% and also 54.8% surge in parts of ICs or integrated circuits. So at least the electronics manufacturing sector of Singapore showing signs of a bit of a resurgence and a pickup that could build over the next couple of months. Interesting other point, when you look at some of their top trading partners, exports of non-oil domestic products to China declining by 0.1% year-on-year. But get this, non-oil domestic exports to Hong Kong surging about 143.6% higher year-on-year. And just showing that Hong Kong, the US, and Indonesia, the only trading partners or major trading partners for Singapore that actually showed sequential growth. Again, not enough to show overall growth for NODX for Singapore in the month of February, gentlemen.
Interesting. So significant miss there, right? But dollar Sing barely flinching. Interesting stuff. Thank you, JP Young. They're excellent as always. All right, so get up to Tokyo and show you what's going on there. You've got Nikkei 225. It's surging. It's up 630 points right now. We've broken 39,000 back up in that territory. Dollar yen. And this is where it gets a little bit head-scratching. We're at 149.06, just ahead of the BOJ starting a two-day policy meeting, the MPC that is, with the BOJ said to be close to exiting its ultra-easy monetary policy, possibly as early as tomorrow. And this is after Japan's Confederation of Trade Unions, Rengo, said the country's biggest companies have agreed to raise wages by 5.28% this year, which would be the biggest hike in about 33 years and higher than forecast. BOJ officials have said that the timing of a move away from negative rates would depend on the outcome of this year's annual wage negotiations, also known as Shunto, the spring wage negotiations. Reports say the BOJ could also ditch its bond yield-controlled YCC and also discontinue purchases of risky assets, including exchange-traded bonds. Let's bring in Marcel Tillion, head of Asia-Pacific at Capital Economics, joining Sri and I live around the desk here at the SGX. Are they going to move early tomorrow?
I think they will. First of all, the background is now very strong. As you mentioned, the spring wage negotiations were, I think, much stronger than almost anyone had anticipated. Yeah. And we've had all these leaks over the last few days. Last week they still said they're considering a move, which is already very strong language by the BOJ standards. You normally don't get these kind of news reports ahead of meetings. And then over the weekend we had more moves that they will make a move. So if they didn't, it would be a massive disappointment now. Wow, interesting. Why is dollar yen at 149 though? I can't figure it out. I think the problem is that markets are still pricing in almost very, very little rate hikes. I mean, basically 20 basis points by the end of the year, which obviously is not enough to move the needle in terms of rate differentials versus the US. I mean, the action is all in US interest rates. I mean, US interest rates can move 10 basis points within one day. You will not have such a move in Japan. So it's all driven by foreign factors.
Okay. Is there an outside chance that the BOJ could disappoint, and what would lead the BOJ to hold on to ultra-loose monetary policy for longer?
Well, some people say they still want to wait for the Tankan results, which are due on 1st of April. And also, the problem with the spring wage negotiations is they cover the employees at large firms, mostly the manufacturing sector. So there's still a question mark about what's happening to smaller firms. I mean, we get shunter results for smaller firms in a couple of weeks. Well, they will slowly trickle in, but the shunter just doesn't cover them. So you need to basically have your ears on the ground to see what's happening. And the Bank of Japan will apparently publish its regional report before the April meeting, where it will gather more evidence on the ground what's actually happening at small firms. And the final thing is that they're going to publish fiscal year 2026 forecast in April for the first time, where they could signal that 2% inflation will be sustained for longer. But I mean, given the communication that we've had, how important the spring wage negotiations are, I think they will make a move this week.
All right, they will make a move. YCC goes. NERP goes as well?
Yes, I think so. I mean, that's if they don't move that, there's no policy change, basically. Okay. So I think they will also remove the tiering systems. They currently have these 3 tiers of reserves, which are remunerated at different rates, and that's causing a bit of problems in the money markets. The money market rates have been quite volatile over the last few years. So if they get rid of that, they should have a better handle on overnight interest rates.
So they do both, and I think your thinking is, what you're trying to tell us is yen is barely going to flinch. If we're expecting any big move in the yen that is stronger or upwards, we're going to have to wait for later, whenever that is, maybe July, right, when they actually start hiking rates. One, and if and when it does coincide with the first Fed cut. I mean, that's got to happen as well, right?
Yeah, I mean, we don't think they will actually hike any further, simply because inflation, if you look at it on a 3-month over 3-month base, inflation is at 2% now. It's slowed quite dramatically. And most of the surge in inflation that we've seen over the last couple of years was simply the import cost shock in the wake of the Ukraine war and the weaker yen. That has now run its course. Goods inflation is coming down, and services inflation is simply not strong enough to generate sustained 2% inflation. Unit labor costs are barely rising at all in Japan.
Yeah.
How significant do you think it was, Marcel, that Finance Minister Shunichi Suzuki declared an end to the era of deflation, says that strong trend of wage hikes is happening now? Does it matter, or does it only really matter what Governor Ueda says ultimately?
I think it matters more in Japan than in other countries. I mean, the Ministry of Finance does sit at a table when the BOJ holds its meetings. Its views are represented in the minutes of the BOJ meeting. So the government has some influence on the BOJ, and I think that they're working together now. And this is a joint action, basically. We also saw last week some news reports that they're going to keep the joint statement, which they released in 2013, where they basically the government pledged to bring the public finances in order, and the BOJ pledged to achieve 2% target. So they're working together to achieve whatever needs to be done.
The other piece to the puzzle is CapEx. Is that moving in the right direction? And if it is, in conjunction with wage hikes, and if there is momentum, then where does that leave the inflation outlook?
I mean, the actual business investment data are always quite volatile. Anything in Japan's GDP data, you can't really trust all that much because it constantly gets revised and it's very volatile. The Bank of Japan tends to put most emphasis on its Tankan survey again, which shows very strong capital spending plans by firms. So if that happens, obviously, at the margin, stronger investment would imply more capacity, less inflationary pressure. But in the short run, it's obviously inflationary. The economy is now... I mean, there's no output gap anymore, so the economy is not overheating yet. So in that sense, we're not really seeing very strong price pressures from this import cost shock that we've seen.
Marcel, if we could just rewind a bit, that 5.28% wage hike, that applies to big companies, right? The Honda, Suzuki's, Toyotas of the world that we talk about every day. The other part of it, right? This is the services side, one. And also, we can't forget about, I think, the full-time, part-time part of the workforce, which is significant. It's almost half. It's about 40%, right? What are your expectations there? Are they going to get 5.28%, or is that highly unlikely?
I mean, when you talk about 5.28%, I think it's important to remember that this includes seniority pay hikes, which are about 2%. So actual pay hikes are 3.5% roughly from those spring wage negotiations. But what we're actually seeing is that because the labor market is now very tight, even though the part-time workers are not well represented by unions, they're actually getting quite strong pay hikes now. The strongest since even stronger than on the eve of the pandemic when the labor market was very tight.
And we're not just talking about one-off bonuses. We are talking about, we're talking about 7-Eleven people, right, yes, who get paid by the hour. They're getting big pay hikes?
Big pay hikes. I think the issue here is the wages of part-timers are very sensitive to labour market conditions, and they move around more frequently than full-time employees. So that's why we're now the labour market is very tight, and that's why we're now seeing pretty strong pay hikes for that part of the workforce. The problem again, though, is they're just 10% of the wage bill. So you really need to see the full-time employees getting pay hikes for the overall wage bill to increase meaningfully. That's why the shunto is so important.
Okay.
Marcel, how much of a productivity lift or a productivity premium are we seeing driven by AI in Japan? Are we at the early stages of that unfolding? And implications for inflation?
I mean, I would say we're not seeing any of that yet. I mean, we've done a ranking of countries in terms of AI adoption, and Japan ranks in the middle. It's not being very well. I think it's doing reasonably well in research, but adaptation and adoption is always slow in Japan. I mean, you have lots of small and medium enterprises which are not very heavy, which don't spend much on IT. So it will take a long time for the productivity gains to show up end of this decade into the 2030s, I think.
And ultimately, where are you putting fair value for the dollar-yen rate, given the BOJ, as you say, is going to make a move this week?
I mean, the yen is definitely extremely undervalued at the moment on pretty much any measure that we track, apart from yield differentials, which are obviously very strongly in favor of the dollar at the moment. But any other measure, purchasing power parity, for example, you've heard the news that Germany has now overtaken Japan, but only in market exchange rates. In PPP terms, there's still a long way to go. So that tells you that the yen is very undervalued. And we think it will strengthen for the next couple of years. I mean, the main trigger is going to be the Fed starting to cut interest rates, U.S. long-term interest rates coming down.
And differentials narrowing, right?
Yeah, differentials narrowing. Yeah. But the undervaluation is also playing a role. At some point, it has to snap back.
Okay. Marcel, we'll leave it there. Thank you very much indeed. So thanks for joining us. Marcel Deniant there from Capital Economics. Right, bring it back to the markets in our region. Taiwan opens at the top of the hour. Emily Tan has a preview. And Emily, PC vendor ASUS Tech in focus today.
Yeah, that's right, Sri. On the back of the company's latest full-year report card, we are getting ready for the Taiwan market to join the trading day at the top of the next hour. Futures are indicating a positive start, better for 0.2%. And as it is a big week for central banks, of course, we're waiting for the BOJ, the RBA, the Fed. Taiwan's central bank will also be coming through with a policy decision on Thursday, and they have hinted at keeping rates unchanged, although the central bank governor says there is no room for cuts before June. We look to ASUS Tech, and full-year profit up 8% year-over-year to $502 million on EPS of 21.44 Taiwan. Revenues of $14.1 billion, but that was a decline of almost 10% year-over-year. The growth drivers will be artificial intelligence. I got a chance to speak to S.Y. Hsu. He is the co-CEO at ASUS, and I asked him about PC demand and the outlook for the first quarter. This is what he had to say.
Actually, this year, the PC demand is not so strong. I think the mainly is because the economic status. So actually, from currently our sales order, our Q1, the PC shipment number were around 3 to 4 million. So that's a little bit flat. But because from the IDC, I think the whole year, the PC TAM growth were around low single digit, maybe 2 to 3%. So the growth rate for the whole year PC shipment number is almost flat compared to the 23. So that's the Q1 status for the PC.
ASUS is the world's number 6 PC maker by market share and aims to be the first in the world with an AI PC. We'll see about that one. Flipping over to the Hong Kong market, coming online at the 9 o'clock hour, and the event risk is the whole slug of China data that will be coming out 30 minutes after the market open. Hong Kong futures pointing to a stronger start, better by 0.2%, 16,720. A couple of things that we are watching, apart from the huge number of companies, blue chip companies reporting this week. I think there's 30 of them. We're looking to Tencent. This as they're reporting this week, not to mention PBOC also approving 10pay's capital boost to $2.13 billion, and this becomes the non-bank payment institution with the highest registered capital. Over at JD.com, they have now changed their mind. They're saying they're not going to be making an offer for the UK's Currys. This was after on February the 19th, they said that they were evaluating a possible offer, and comes just days after a similar backing out by Elliott Advisors. They said that it was part of their UK and potential European expansion, but this follows careful consideration that they will be not making a bid this time. JD.com shares will start at $104.50. Shri, it's back to you.
So sad. I bought my first Walkman from Currys a long time ago, the Rochdale branch. Right, thank you, Emily, for that. Strong day for the Japanese markets. Nikkei 225 up almost 2% this morning. Here's a look at some of the big movers so far. Nissan and Rakuten leading the gains. We're back shortly.
You can do it, son.
Good things come to those who wait.
It's time to take that rite of passage.
You can do it, son! I'll keep going as long as it takes for some good to come my way.
You knew I would do it, didn't you?
Come my way.
Whether you're a couple of steps ahead or not, I think is irrelevant. It is a movement that will transform countries over the next decades.
On the next Managing Asia, the people behind Ayala, steering the EV revolution in the Philippines.
When we do something, we want it to scale. So our vision for EVs is it becomes a real component of the Philippine transport sector.
Catch more of my exclusive look inside Ayala Corporation only on Managing Asia.
There's a huge hype around AI and what that cycle is going to bring.
Ultimately, it's the infrastructure players that continue to win out in this sort of AI boom we are seeing.
AI is quite possibly the defining technology of this decade, maybe even of our generation.
This is an AI revolution, and it's really, I think AI is everywhere, but it's not only happening in the data centers, it's happening on devices.
AI is really a critical part on our product development, but it also goes into our product.
Our goal is to democratize supercomputing for everyone and give access to them to improve business productivity, to get better insights from the data.
This is not about artificially, creating solutions. It's not about replacing people. It's about augmenting capabilities, competences, skills.
It is the year of AI, and it's ironic. This conference for almost a decade was all about 5G, and now this year it's the AI conference.
Welcome back. India's election authority has finally announced the timeline for this year's general election. Lin Lin takes a closer look at the issues leading up to the elections. Good morning.
Good morning, Shri. So in addition to these general elections being the biggest democratic exercise in the world, it's also expected to be one of the most expensive, with the Centre for Media Studies finding that political parties are expected to spend around $14 billion, which puts it on par with the US. Now, a lot of this money that is sloshing around, though, lacking transparency. When we talk about these so-called electoral bonds, this was a system that was brought in 2018. It was actually found to be unconstitutional by the Supreme Court last month, but it effectively allowed companies as well as individuals to be able to anonymously donate to these political parties via these bonds, which were bought via a state bank with the money then provided to the parties. But critics say that what it allowed was companies to be able to provide money while avoiding any kind of potential allegations that there were currying any kind of favours. Now, in terms of the key takeaways, certainly highlighting that when we look at the amount that was provided to the BJP party, this is Modi's party, it's about 55% according to Reuters calculations, which is a lot more than the major opposition party here. It also showed that a lot of India's leading companies like the likes of Vedanta, Bharti Airtel, ITC, they were among the buyers of these bonds. Now, one name missing from the list is Mukesh Ambani's businesses, but if you take a closer look and look at entry number 3, there is a little known company there called Quick Supply Chains, and according to Reuters, citing regulatory filings, 3 of Reliance Industries companies, they own more than 50% of Quick, although when those allegations were put to Reliance, they said that Quick is not a subsidiary of Reliance, and they did not elaborate any further on that. The other thing worth noting is that the company topping the list was Future Gaming and Hotel Services, Shri, run by a guy known as the Lottery King in India, and he's been making headlines for all the wrong reasons, accused of fraud and money laundering. But certainly, I guess the irony here is that this system was brought in to actually bring in transparency, but even the finance minister on Friday, while trying to defend the system, acknowledged that more accountability was needed.
Absolutely, Lynn. Thank you very much indeed for that perspective. Let's continue talking about the election in India now that the firing pistol has been fired. Rick Rosso is with us now, Senior Fellow and Vadvani Chair at the Centre for Strategic and International Studies, or CSIS. Rick, thanks a lot for your time. First of all, can we start with your baseline outcome? Does Modi win a landslide third term, or does he risk a reduced majority?
Well, we've already got some pre-election data that shows that, by and large, he's expected to win somewhere between 330 to 375 seats. So voters across India really are expecting a thumping majority, probably increasing a majority. But it is a democratic election, and as we know, barring a few countries like Russia, the voters will ultimately choose. And so we're going to see in the next couple of weeks whether those prognostications hold true. But right now, it looks like a third term looks like it's a pretty smooth sailing to be able to get that.
How would you say the international community and international investors that have really favoured India, we've seen a lot of momentum in this rising India theme, how do you think they feel? Because the UK and India have put the free trade deal talks on ice. Lynn was talking about the electoral bonds issue. There's farmer protests. There's also the Citizenship Amendment Act as well. Is that going to make people think twice?
Mostly when board meetings come together, they talk about the business fundamentals, not so much political issues, unless it's going to impact their business directly. But, you've seen a couple of flashy announcements by tech companies, suppliers of major global cell phone companies, and it kind of feels like maybe India is finally getting a piece of this global manufacturing that's shifting away from China. But I think, as you kind of hint, the data actually shows otherwise. India's seen almost a 20% drop in the last year on foreign direct investment, about $42 billion in the last 12 months. And that's well down from the peak of $72 billion just 3 years ago. So I think investors are certainly playing it cautious leading up to the election, even though they think they know what's going to happen. But also, they're paying close attention as well on what's happening with state-level policies, because a lot of what businesses need on electricity and such are driven by states' issues as well. So it's not all in Modi's hands.
India is a secular democracy. It was enshrined as a secular democracy. Do you feel that there is a perception, Rick, that India is moving in a more authoritarian direction?
And it's more than a perception. I mean, we've seen the government take some steps. I mean, for the most part, made a lot of splash, but the impact on lives may not be quite so great. Like you mentioned, Citizenship Amendment Act, which is getting a lot of attention. It's going to offer accelerated citizenship for people that flee to India for religious purposes, except Muslims. It's a relatively small number of people, and changing the constitutional status of Kashmir, for instance, is something that we all kind of expected would happen at some point. Even things like uniform civil code, where they're going to have all religions adhere to the same civil code. There's other topics that we know the government has considered in the past, like actually forcing everybody to try to prove their citizenship, which I think could be a lot more explosive. So some modest things that we've seen in the review that got a lot of attention. Bigger things, I think, if the government feels weak, if they feel they need to, play a major card to try to enthuse voters. But right now, it looks like smooth sailing, so I don't expect anything too explosive in the weeks leading up to the election.
Rick, real quickly, so, this whole idea of India being the favorite China plus one or the favorite de-risking friend, it's not being borne out by the data, by money, by foreign direct investment, et cetera. I get that. But, strategically, we've seen over the last, say, 12, 18 months, the U.S. and India move so much closer together, right? F-404 fighter engines, repair and maintenance of naval craft, et cetera, with a new and even stronger mandate. If that's what we end up seeing for Modi, what does it mean for India-U.S. relations?
You're right. We've seen some big steps. And in fact, just about a week ago, the United States Coast Guard and India's Coast Guard did exercises in the Andaman Nicobar Islands, which is considered very protected, very secure, and something that I don't think would have been even able to discuss 10 years ago. It is amazing. Politically, I don't think a stronger hand's going to matter that much to Modi because you've seen voters really don't care that much. And in fact, if anything, they kind of prove it. I think the bigger question mark on how far are we going to go on our defense relationship is what happens in Beijing. We started getting yeses on a lot of things we put on the table with India that were no's 10 years ago. After China began to incur in India's territory along the border. So as Beijing presses its claims, I think you're going to see India getting to yes a lot faster on the things that we care about in U.S.-India defense relations, the Quad, things like that.
All right, Rick, listen, great to talk to you. Appreciate the time. Rick Rosso there, CSIS, joining us live. And just real quickly, if we could take a look at markets and how we're shaping up. And Tokyo especially just had reports out the Bank of Japan is going to do an unscheduled bond operation buying 3 trillion yen, which is about $20 billion of bonds, starting Tuesday and also ending on Thursday. This is as the BOJ gets set to meet later this morning in a 2-day meeting. That's it for Squawk this Monday. On behalf of Shree and myself, thanks for watching. Keep it right here. More market opens still ahead on Street Signs. Keep safe. We will see you tomorrow.
On a $100,000 US margin loan, Interactive Brokers charges just 6.83%. Do you know how much your broker charges? Fidelity and Schwab charge over 1.5 times as much. E-Trade and TD Ameritrade are even higher. Move your account to Interactive Brokers and save at least $5,200. Or much more if you're trading big bucks.
Breaking news, market moves. Scott Wapner from the NYSE. Closing bell, CNBC.
Think of Switzerland and you might think of fine cheese, luxury chocolate and snow-capped mountains. But you may also think of money. Switzerland has 1 billionaire for every 80,000 people, making it the third most dense billionaire population in the world. Only Luxembourg and Hong Kong have a higher proportion of individuals with a net worth of at least 10 figures.
Do you feel like you know any billionaires?
I personally know quite many billionaires, yes, and millionaires, yes.
I do not know any billionaires, no. Plenty of millionaires, but no billionaires.
No, I don't. I wish I did, but I really don't. Swiss residents are also among the richest in the world, with a mean net worth of almost $700,000, ahead of the US and Hong Kong. That makes the country stand out on several key wealth metrics. So what makes Switzerland such an attractive place for the uber-wealthy?
Every new vehicle we put out, we're improving fuel economy and emissions.
We need a balanced and a fair energy transition for everyone.
The total value chain of battery will be very important.
Improve our operational efficiencies and reduce the consumption of natural resources.
Environmental sustainability is a must, and energy security is another pillar.
Renewable energy is cheaper than electricity made from fossil energy in 90% of the world already today.
Fostering sustainability on CNBC.
My parents were Holocaust survivors. They taught me that nothing is impossible. When we set a goal for ourselves to bring a vaccine to the world against COVID, we knew that failure is not an option. Ambition is an integral part of every big success. If we are working for the bottom line, we will never achieve it. What you need to do is to work for the purpose of your company. In Pfizer, I think we have learned when you give to people ambitious goals, you will be surprised how much they can deliver.